Okay, good morning, everyone. Good afternoon, everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? Please do let me know that there is no issue so that we can start the discussion for the day. Okay, done. Before we start the discussion, I hope remember we were discussing national income aggregates last week, right? That is basically we have completed GDP. We'll continue with other types of income aggregates. But before that, as usual, I just want to give you one assignment. This we will do it every week now, henceforth. That is, in the last 1 week, or let's say in the last 1.5 months, whatever articles are relevant, whatever articles are important, the most important articles from the chapter that we have covered in the last week. That is basically the concept of GDP, right? National income and other basic concepts. Today we'll also cover inflation, etc. From these articles or these chapters, which articles have come in the current affairs, which are relevant for UPSC. So I'll just give you, I'll just give a glimpse of it. This is the assignment. And please do let me know whether you people are up for it or not. If you're not interested, then there is no point of doing it. What is the assignment? Henceforth, every week, I'll keep on giving you around 10 to 12 articles which have appeared in different newspapers, not just Hindu. Go beyond Hindu. I've told you this already. Don't just stick to Hindu. Please go beyond Hindu. That is, I've told you a list of newspapers. You can read any one business related newspaper. So, what I'll do is, in the last 1.5 month, what articles have appeared related to what we are discussing in the classroom so that you have a idea, right? You know what we are discussing is relevant, how to apply it, how to read current affairs, what articles are relevant, etc. Just to make you understand, we will do this exercise weekly. But please tell me, will all of you be able to read the articles? I'll give you the list of the articles. Will you people read it? That is basically my question. Don't expect me to read it. I will read. I know that. I'm the faculty. I'll have to read it. But I'm not going to write the exams. You people are supposed to write the exams. So you should read it. For example, today we'll discuss the concept of recession, depression, etc. etc. We'll discuss that. Don't worry. We'll discuss that idea today. So very recently, there are two important emails that have taken place, not in India, but in the global market. That is, European Union has entered into recession. Germany has entered into recession. Now, some of you are asking, what is recession? Please don't worry. We'll discuss that today. So regarding recession, there were a couple of important articles which have appeared in the last couple of months in the newspaper. And just for sake of understanding, for UPSC, you don't have to understand what is actually happening in individually all the countries. Do you remember the term spillover effect? Please tell me now. Do you remember the term spillover effect? And if you ask me, sir, where have you discussed the idea of a spillover effect? Last week, there is a term spillover effect. And I told you spillover simply means what? One event will have an impact on another event. In the same argument, I told you, whatever is happening between Russia and Ukraine will have an impact on Indian economy, right? For that reason, just to prove that point, have a look at this. What is the impact of that? What is the impact of that on the Eurozone? What is the impact of a recession in Germany on Indian economy? That is application of spillover effect. So I've given you a list of around 10 plus articles, right? These are there in the PPT. Now come to the second very important point. How many of you have read today's Hindu newspaper? Please tell me. How many of you have read today's Hindu newspaper or the Hindu newspaper? Now, in this, the Hindu newspaper, I want you to focus on three articles. Focus on three very important articles and keep the clippings if you are using online newspaper. Sir, no, I feel like reading physical newspaper, then keep the newspaper. Tomorrow itself, you'll understand the importance of it. The first article that I want you to have a look at is inflation article. Yes or no? In today's Hindu newspaper is an article on inflation. If you ask me, right in the business page, top right side, there is an article on WPI inflation. Please keep that. Second, go to the left side bottom part. left side bottom part, the last article that you can see again in business newspaper, I'm sorry, business page in Hindu newspaper, the last article that you'll see is the government might impose the countervailing duties on steel imports. Important article. If you don't trust me, you can check the newspaper right now. That the government of India might impose. In fact, in other newspapers, they've said they are not going to impose it, but don't worry. Government might impose countervailing duties on steel imports. Now, concept of CVD is important. Why CVD is relevant is important. What is the importance of the article tomorrow, or in fact today itself? You'll understand that. Don't worry. And just above that article, there is a third article. So first, second, and a third article. The third article that I want you people to have a look at is SBI 81 bond article. Please do let me know. Anybody here says, sir, in Hindu, that is in the business page, these three articles have not come. Please do let me know. Right, all the three articles are there. The first one is in the right side top, and the remaining 2 and 3 are bottom, left side bottom. Okay, so please keep the cutting if you have a physical paper, or if you're using online paper, right, just download those two photos. We'll discuss, you'll understand what is the importance of all this. So here I've given around 10 plus articles and another 3 plus articles from Hindu newspaper today. That is your assignment. 1 week, please read all these articles and tell me whether what you are reading in the newspaper, whether is it relevant or not. Let me know whether you are studying in the classroom. Are you able to connect it to current affairs or not? Right? Is it relevant to UPSC most importantly or not? So that is the assignment. We'll do this weekly. We'll do this assignment on weekly basis. But more importantly, please understand the next point carefully. More importantly, this assignment is for your benefit. It's not for my benefit. I've read all these articles. I know what is there in all of these articles. These articles are not for me. These articles are for you. Please read this and let me know whether these are useful to you or not. Now come to the most important point now. Let's start with the discussion in the classroom. That is, we started with the discussion on national income aggregates. Now, in the national income aggregates, what we have discussed last week, we started with the concept of GDP. Yes or no? We started with the concept of GDP. GDP stands for what? Gross domestic product. And many of you, last week, I was just checking the comments after the class was over. I was just checking the comments, and many of you were basically saying, so there is so much of information in economics, even in the static portion. How do I remember it? This is my second weekend. So this is a trick that I generally use. Either if it is useful to you, use it. Or if you have a different trick to remember the things, please use that. It is entirely your decision. Now, how do I remember? This is generally how do I remember. I will make mind map. That is basically I'll make a picture to remember everything that has been discussed. For example, let me show you a mind map for gross domestic product. Let me show you a mind map. Gross domestic product stand for what? It stands for, right, gross domestic product stands for the market price of all the final goods and services which are produced in India for a financial year, for half a financial year, or for a quarter. Anybody has a problem with the definition? GDP, I'll write the definition. That is the first line. Second line will be GDP. GDP is published by whom in India? It is published by NSO. I've not come across this point so far, but I'll write it. It is there in the slide. Don't worry. NSO simply stands for National Statistics Office. National Statistics Office. It is this authority which will publish GDP data either for quarterly, half a financial year, or full financial year. Third, the GDP calculation can be done using three methods. There are three methods to calculate a GDP. What are the three methods? One is called as an output method. Do you remember this? One is called as output method. Second one is called as income method. And the third one is referred to as expenditure method. One is output method. second one is income method, third one is expenditure method. Now, the latest methodology, this will be my fourth pointer. The latest methodology, right? What is the latest methodology? Under the value addition or output method, from 2015, we have introduced a new methodology. What is a new methodology? First point, we have introduced a new base year. We have introduced a new base year. And if you remember it correctly, I told you base year as of now for the calculation will be how much? 2011 and 2012. And beyond this, I have not discussed anything regarding base year. Today we will discuss. Don't worry. Today we will discuss what is a base year. Second very important point, we are using a method called as gross value addition. Do you remember gross value addition? How do we calculate value addition at individual stages? Third one, we have shifted from the cost price method or the factor cost method to market price method. For example, whatever is the value today, don't worry, do not buy at the exact value of GDP. UPSC is not going to ask you that. Whatever is the value of GDP that you read in the newspaper, it is calculated at market prices. And the fourth very important thing, fourth very important change that we have done is we have introduced a new system by the name of Ministry of Corporate Affairs 21, where production data will be collected and utilized. And finally, the two formulas that I've asked you to by heart, simple by heart. Okay, the two formulas are the factor cost, right, at a gross value addition, GVA at a factor cost. To this, I will add production taxes, production taxes, and I will subtract production subsidies. What will I get? I will basically get GVA at basic prices. Anybody has an issue? Am I writing different formulas? Please do let me know. GVA at basic prices. Then we will use the GVA at basic prices. To this, I will add product taxes and subtract product subsidies. Subtract product subsidies. What do you get after this? It is basically the GDP at market prices, gross domestic product at market prices. And finally, regarding GDP, at the end of the last session, I told you certain exemptions, certain things to consider whenever you're discussing about GDP, gross domestic product. What are the exemptions? One, the goods which are resold will not be counted. Yes or no? The goods which are resold should not be counted. Second, the black money or parallel economy is also not counted. The black money or the parallel economy is also not counted. Third one, the services which are provided in households will not be counted, etc. So please have a look at now. Whatever we have discussed in 2 hours, or let's say 2.5 hours, or whatever 3 hours, I've made a summation of all the discussion that we have done in a simple mind map. This is the picture that I generally remember in my mind. And even if I don't have any PPT, even if I don't have anything, I'll simply know what to go, what to start, where to discuss, what to discuss, how much to discuss, etc. Done? Right? So this is basically how I would expect. Again, please understand. I will simply write a hashtag here. It is a trick. It is a tool. There is no compulsion that you should use only this method. It is entirely up to you. If you find this is easier, follow this method. If you find you have a different method, if you have a different technique to by heart or remember things, please go ahead with that. My recommendation is try to use mind maps. It is useful for you. Done? So with this caveat, can we start the discussion? Can we start the discussion? What we have done so far is basically whatever we have discussed in the last Sunday's class. Now, the next concept that I want to start discussing is the concept of gross national product. GNP, gross national product. Okay, so one is GDP, second one is GNP. Now, please understand the difference between both of them. If you remember, yes, the class last Sunday, I told you GDP is a territorial concept. I hope you remember this. GDP is a territorial concept. What do you mean by territorial concept? Whatever is produced within Indian territory, assume this is India. Please underline my word. Assume this is India. So whatever is produced within India, final goods and services, the sum of that will be counted as a part of GDP. But please understand, when you talk about a GNP, gross national product, those who are asking for the long form is there in the previous slide. Please don't worry. Gross national product. The gross national product is a nationality concept. It is a nationality concept. What do you mean by nationality? Indian nationals, when I say nationals, you can even count companies, you can count individuals, etc. So Indian nationals, whether they are producing within India or outside India, does not matter. But if you take the sum total of market prices of final goods and services which are produced by Indian nationals, that will give you gross national product. Any difficulty in understanding this? Please do let me know. I'll repeat the definition here. Gross national product simply means the market price of all the final goods and services which are produced by Indian nationals, whether producing in India or outside India. Doesn't matter. As long as it is produced by Indian nationals, we will take it as a part of India's gross national product. Sir, what do you mean by this? Let me give a very simple example. Imagine there is a person A. Person A is a software engineer, right? Indian software engineer. Now, when this person A will work for a company, earn wages, salary or wages does not matter. Earn wages or salary working in India. Please answer to my question. Participate now. A is an Indian citizen, national of India. He is working in India or she is working in India. Now, the wages or the salary earned by A, will it be counted as a part of India's GDP? Participate and tell me. I'm looking at the comments now. Will it be counted when India's GDP is calculated? Answer is yes. Any problem here? Some of us saying no. Why, my dear? Why? Right? I hope remember, either you calculate GDP through income method or production method. Have you forgotten already? Sir, in 7 days, whitewash ho gaya. Right? So when you calculate GDP, can you calculate GDP using income method? Yes. What will you count in income method? Salaries, that is wages, rent, yes or no? Four factors of production: land, labor, capital, entrepreneurship, expenditure incurred by that, basically under the production methodology, income earned by through or income earned by providing them, it is GDP through income method. So either you count this way or that way, doesn't make any difference. So A as a salary, will it be accounted when we are calculating GDP? Answer is yes. What about GNP? Please tell me now. What about GNP? Will A's salary be counted when we are calculating GNP? Answer should be yes. Some of you are saying no. My dear, no. Answer should be yes. Why? I said A is a citizen of India. Correct? A is citizen of India. And when A is a citizen of India, whether A is producing, staying in India or outside India does not matter. You will have to count it as a part of India's GNP. Any problem here? Please do let me know right now. I'll give you one more example. Right? Tell me now. Indian company. Underline the term Indian company. Indian company is working in India. So the profit generated by Indian company working in India, will it be counted as a part of GDP? Of course, yes, because it is producing, earning profit in India. And on the other side, because this is an Indian company, whether it will earn a profit within India or outside India, don't you think by default it has to be counted as part of India's GNP? Any difficulty here? Any difficulty with number one? Please do let me know. Right? Because in GDP, the production of goods and services has to be done within Indian territory. Whereas in case of India, if you want to calculate GNP, you'll have to focus on nationality, whether the person is Indian or not, whether the company is Indian or not. That's the reason I've written the term here. Please look at the top. GDP is a territorial concept, whereas a GNP is a nationality concept. Let me go to second number here. Indian company which is working abroad. Let's say Tata, they will produce a certain goods and services outside India through one more company, and they will generate profits outside India. Now, please let me know, because the production is done, profits are generated outside India. Will you count it as India's GDP? Let me know. Will you count it as a part of India's GDP? No, you should not count it. Why? Profits are generated outside the territory of India. But on the other hand, it is an Indian company. So when it is an Indian company, whether it produces within India or outside India does not matter. It has to be counted as a part of GNP. So focus only on two things. Is it Indian, whether produced in India or outside India? If it is Indian, whether it is company or an individual does not matter. By default, count it as a part of GNP. But if it is produced in India, earned in India, it is GDP. If produced or earned outside India, not a part of India's GDP. Come to the third number. Indian citizen is working outside India. For example, let's say you are a software engineer. Your company will send you to USA, right? Basically for, let's say, 6 months or 3 months, which means you are working outside India. You are producing goods and services outside India. So it will not be counted as a part of India's GDP, but it will be counted as a part of India's GNP. Any problem with number three? Let me go to number four now. Foreign citizen working in India, right? Foreign individual is working in India. So because the production of goods and services or salary is earned in India, I will count it as a part of GDP. And because this is a foreign citizen, not an Indian citizen, just like you have gone to USA on 6 months work assignment, same way a foreigner might come to India on a 3-month work assignment. So it will not be counted as a part of GNP. And finally, fifth one, foreign company is working in India. So foreign company working in India, earning profits in India. So by default, it will be counted as a part of GDP. And because this is a foreign company, right, it is not an Indian company, it will not be counted as a part of GNP. Any problem here? There are 5 examples which I've given. And again, do not complicate, do not try to read 100 situations. That is not relevant to you. What is relevant? Simply find out whether profits, income, right, a salary, etc., whether it is generated within India or outside India. If it is within India, count it as part of GDP. If it is outside India, do not count it as part of GDP. On the other side, whether the producer or the service provider, etc., is it a national of India? If yes, irrespective of where they are producing, count it as part of GNP. Otherwise, do not count it as part of GNP. Any problem in understanding the basic idea of GNP and the difference between GDP and a GNP? Right. So GNP is the market price of all the goods and services which are produced by nationals. I'm using the term nationals. In some of the books, instead of nationals, they will use the term residents. So by the nationals or the residents of a country for a particular financial year. And that is the definition of GNP. It will consider the income generated by the citizens or residents or the nationals of a country who are present, irrespective whether they are present in India or outside India. It will include the income generated by foreign nationals who are, it will not include, it will exclude the incomes generated by foreign nationals who are residing in the country. And what is the formula for GNP? Please look at the formula. GNP is equal to, you already have GDP value. In GDP value, you will make one adjustment which is called as a net factor income from abroad. NFIA, net factor income from abroad. Now, what is this net factor income? Point number one, please do tell me, do you remember the term factor income? Let me know. Do you remember the term factor income or not? Because I'll have to start from the basic, only then you'll understand what is net factor income from abroad. because many of you will simply by heart it. Factor income means on the four factors of production, whatever income is generated. For example, if there is a citizen of India, let's say A will provide services, that is called as labor. Labor is right, one of the factors of production, and this labor will earn income. This labor will earn income, that is in the form of salaries or wages. This income is nothing but one of the factor incomes. What about the company? The company will also earn income in the form of profits. Yes or no? The company will earn income in the form of profits. So what you need to do is very simple idea. Please understand this very carefully. Imagine I'm calculating GDP of India. I will consider rent. Yes, I will consider rent. That is one of the factor incomes. I will consider, right, salaries or wages. That is the second factor income. Third one is interest, and the fourth one is profit. Do you remember this? The starting point of GDP calculation is in fact this only. That is a factor cost. Now imagine there is a foreign company. There is a foreign company which has generated profit. Question number one. Have you counted this earnings of foreign companies or profit earned by the foreign companies in calculation of GDP? Let me know. Have you taken that? Have you added this profit earned by the foreign company in the calculation of GDP? Answer is yes. So in the GDP, already you have counted it. Some of you are saying no. How? This is very basic point. You already have counted in the calculation of GDP. Now, if you shift from the GDP to GNP, please tell me. If you want to use GDP to calculate a GNP, should you include profit earned by the foreign companies? Tell me now. Should you include the profit earned by foreign companies? No. You will have to subtract it. You will have to exclude it. Done? Now, let's say on the other side, there is a software engineer, Indian software engineer, citizen of India. He has gone to USA for a period of 3 months. And this Indian citizen who has gone to USA has earned a salary. In USA. Question number one. Did you count the salary of this Indian citizen working in USA when you calculated GDP? Tell me, I'm looking at your comments. Did you include the salary earned by Indian citizen earning in USA? No, you did not calculate it. You did not include. Array. Some of you are saying yes. Then my doubt is, what are you listening to? What are you listening to? A foreign, Indian citizen is working abroad. Will you count the salary earned by Indian citizen in your calculation of GDP? No, it is clearly there. I'm not throwing anything new at you. Whatever we have discussed, I'm trying to consolidate the same idea. So in GDP, no. But when I'm calculating GNP, will I include it? Of course, yes. Now, if I want to move from GDP to GNP, is it okay if I say I will add this salary? Any problem here? I will add the salary and I will subtract the profit earned by foreign company in India. That is basically concept of net factor income from abroad. Net factor income from abroad. Right? That is, we are going to count how many factor incomes by Indian nationals are generated outside India. Simple. Take the sum total of factor incomes generated by Indian residents, Indian citizens outside India, add it. And how much is the total factor income generated by foreign nationals, foreign companies in India, subtracted from GDP? For example, let's take a very simple example here so that you will understand it. Let's say GDP of India is 100 crore rupees. Simple numbers. Let's say GDP of India is 100 crore rupees. And the company, foreign company, name is, let's say, company XYZ. This foreign company in India has generated a profit of 10 crore rupees, has earned a profit of 10 crore. And this Indian citizen who has gone to USA has been paid a salary of 1 crore rupees in 3 months. Now, please calculate and tell me what is the gross national product of India. Let me see how many of you are able to understand, how many are able to follow what I'm discussing. Right, I've given you three numbers. India's GDP is 100 crore rupees. The profit earned by company XYZ, foreign company, is 10 crore rupees. And the salary earned by Indian citizen in USA is 1 crore rupees. Can I write the formula like this? 100 crore plus 1 crore rupees minus 10 crore rupees. Any problem with the formula? Please do let me know right now. 100 crore, right, plus 1 crore minus 10 crore. Now, rather than writing this way, I will write it like this. GDP plus net factor income from abroad. Any problem with the formula? GDP plus net factor income from abroad. Some of you are saying 72. How? How do you get a number 72? The three numbers that I've given are 100, 10 and 1. Right? How do you get 72 from 100, 10 and 1? Please do let me know. Right? So idea is simple here. What I'm counting is the total income earned, factor incomes, earned by Indian nationals outside India, add it to GDP, and subtract whatever is the factor incomes earned by foreign companies in India. Right? Foreign individuals in India, foreign investments in India. So what I will do is this 1 crore, that is a factor income coming in India, 10 crore factor income going out of India. I will take this and call this as a net factor income from abroad. Any problem with this? Any problem with this? For example, right? Take this number. Take five situations that I've given here. I'll just throw arbitrary numbers. Please tell me what is the net factor income from abroad here. Right? Let's say 10, 20, 30, 40 and 50. Please do calculate and tell me how much is the net factor income from abroad in this table. Let me check how many are able to calculate. Again, UPSC will not ask you calculations. UPSC will test you your logic behind it. So in case of net factor income from abroad, right, net factor income from abroad, foreign citizens who are working in India, foreign companies which are earning in India, how much is that? Indian citizen, foreign citizen working in India, foreign citizen working in India is 40 rupees. So I'll take 40. Foreign company working in India is 50. So this is the foreigners earning in India. 90 rupees is foreigners earning in India. Now, Indian citizens, Indian nationals working outside India, Indian company working in India. So, will you count this? No, you don't have to count it. It is not earned outside India. It is within India. So, it is already part of GDP. Indian company working abroad earns a profit of 20. Count 20. Indian citizen working abroad earns 30. Count 30. So, from outside India, we are getting how much? 50 rupees. Any problem? From outside India, we are getting 50. But from within India, right, 90 rupees is a foreign earning. So if I have to write the formula like this, let's say GDP is 200 rupees. Let me know whether there's a problem with this. GDP is 200. I will add income earned by Indian citizens working outside India. That will be 50. And the foreign citizens working in India, I will subtract it. 90. So 200 plus 50 will be 250 minus 90 will be 160. Any problem with this? Please do let me know. Any problem with this? Right? It's a simple idea. Do not complicate it. Keep it simple. What is simple here? Indian nationals. When I say nationals, companies, individuals, etc. How much they have earned outside India, add it to the GDP. And foreign companies, foreign citizens, etc., how much they are earning in India, subtract it from GDP. That will give you gross national product. Now, please tell me, let me ask you a question. This is where UPSC will test you. If I write GDP and GNP, please tell me which is a better indicator if you want to find out how Indians are doing. Let me know. If you write GDP and GNP, both are there. You're calculating two indicators. Which is a better indicator? I'm not saying which is used. I'm saying which is a better indicator to find out how Indians are doing. Don't you think GNP is a better indicator compared to GDP? Any problem here? Don't you think GNP is a better indicator compared to GDP? Yes or no? Anybody has a problem with this? Anybody has a doubt in this? Please do let me know so that I can make you understand and only then I can go forward. What if foreign national decides to invest back in India or Indian national decides to invest back in a foreign country, my dear? If you invest, you will earn money on it. Done. If you invest, you will earn money on it. That will be counted as a part of interest. That will be counted as a part of interest then. It doesn't matter. It will be counted in this way only. How, sir? My dear, if let's take a very simple example, right? I'll take a simple example, right? Imagine India's GDP is 100 crore rupees. India's GDP is 100 crore. Now, when you say India's GDP is 100 crore, right? Let me give you the problem with the GDP number here itself. Can you tell me how much of this 100 crore rupees is earned by poor people in India? Let me know. Can you please tell me how much of this 100 crore rupees is earned by poor people in India? Question number one. Can you find out? Answer is no. No, you will not be able to find. Why? The sum total of all the factors of production in one way, or let's say the market price of all the goods and services, is a GDP value. Second, can you tell me how much of this 100 crore rupees is profit earned by Indian companies? Tell me. How much of this 100 crore rupees is profit earned by Indian companies? Can you find out? Answer is no. But some of you are saying yes. How? Tell me. I'll give you a data. 100 crore rupees. GDP is 100 crore rupees. Tell me how much is the profit earned by Indian companies? How much is the salary earned by Indian citizens? How much is the interest earned by Indian investors? Can you find out the data using 100 crore rupees? Answer is simply no. Why? You are simply taking total amount of salary earned, total amount of profit generated, total interest earned, etc. But on the other side, if I write GNP is equal to, let's say, 90 crore rupees. Now, please tell me, is it not an indicator that 90 crore rupees is the sum total of the profit earned by Indian companies plus interest earned by Indian individuals plus, right, investors rather than individuals, plus salaries earned by Indian nationals, etc. So in that case, don't you think GNP is always a better indicator? I'm not saying bigger or smaller here. Please understand. I'm not saying bigger or smaller. All I'm saying is, if GNP is 90 crore rupees, what does it indicate? It simply indicates whatever Indian nationals have earned in the form of salaries, how much profits has been earned by Indian companies, etc. So if you want to find out how Indians are performing, then basically you'll have to focus on GNP, not on the concept of GDP. Any problem here? Any problem? Please do let me know. But in GNP, GDP is also included, my dear. Look at the formula. Are we simply including GDP? No, we are adjusting GDP. Can you understand the statement here? We are not simply including GDP. No. Why the formula is written like this? I'm telling you. GDP simply means the market prices of all the goods and services produced in India. But if I want to move from GDP to GNP, what do I do? I will take out profit earned by foreign companies. I will take out salaries earned by foreign nationals. Then I will move towards GNP. So both are not one and the same. Okay. Only money remitted is included, my dear. If you are there in USA for 3 months and you come back to India, will you keep your money in banks in USA? Let me know. Please do tell me. You are there in USA for 3 months and you come back to India. Will you keep your money in banks in USA? Let me know. Right? No, you will bring all the money back. You will bring all the money back to India in the form of remittances. Okay, done. Again, don't complicate it. Keep it always simple. Do not complicate it. Okay, I've given you what are the components in the net factor income from abroad. So in the form of salaries, in the form of profits, retained earning, etc., etc. What we have discussed, factors of production. That's a basic idea here. Okay. So any problem with the GNP, gross national product? And many of you are asking which is bigger. There is no universal answer to that. Generally, it will vary from one country to another country. For example, in India, GDP value is greater than GNP. I hope you understand. In the context of India, GDP value is greater than GNP. And for many other countries, GNP is greater than GDP. It will vary from one country to another country because there is a component called as net factor income from abroad. So it will vary from one country to another country, but you should know what is the basic difference between GDP and GNP. Now let me go to the third one, net domestic product. The third one is net domestic product. Right? One is GDP, second one is GNP, third one is NDP, net domestic product. Now, what is this basic concept of net here? There's a term net. What is the basic concept of a net? Net simply means, please understand, I think I've written the term net. Okay, so have a look at this. Net means what is left out after deducting from gross. I'll give you an example also. Please have patience. You have calculated gross so far, right? One is a gross domestic product. Second one is a gross national product. Gross means the total. But when you move from gross to the net, you will make certain adjustments or deductions. So what do you mean by adjustment or deduction? Let me give you a very simple example. Let's say you become IS officer. Done? All of you. That's my wish. All of you become IS officers. Now, Government of India will give you a letter which says, I'll just throw arbitrary number here. Don't worry. Government of India will give you a letter saying that annual salary to you is 12 lakh rupees. That is, the Government of India will be paying you 12 lakh rupees per annum. Per annum means per year. Now, most of you will take out your calculator or your mobile phone because your CSAT is wonderfully very strong. You will divide 12 lakh rupees divided by 12. And the calculator will tell you it becomes 1 lakh rupees. Now, please tell me, once you become IS officer and you start serving the country, assuming, and the month is over, will your bank account receive 1 lakh rupees? Let me know. Will your bank account receive a payment of 1 lakh rupees? Those who are saying yes, you do not know how the system works. No, you will not get 1 lakh rupees. Why? This 1 lakh rupees is your gross salary, my dear. This is your gross salary, total salary. Government will say, before giving you 1 lakh rupees, what about taxes? Yes or no? What about taxation? Who is going to pay the taxes? Right? Government is not going to pay on your behalf. Sir, what kind of taxes? Income taxes. So government will deduct the taxes. What about PF? What about PF? PF contribution. Right? They will deduct that also. There will be certain other types of deductions. And after all these deductions are done, let's say arbitrary number here, you will get a salary of 80,000 rupees. Now, please do let me know, can I call this 1 lakh rupees as gross salary and 80K as a net salary? Any problem here? Those are working in a company. Those who are already working in a company, you will know this. Right? The company will give you something called as a CTC. Please check your offer letter. The company will give you something called as a CTC, cost to company. And let's say arbitrary number, same, 12 lakh rupees. At the end of 1 month, you will not receive 1 lakh rupees in your bank account. Certain deductions will be done. So gross means the sum total, everything is included. But if I move from the gross to the net, certain deductions, certain adjustments will be done. Now, can I use the same concept to explain to you one more idea? Right? Let's say example 1 and example 2. Listen to the examples. I'll ask you questions. Understand. Please understand. Understanding is important, not by hearting. I know every book that you're referring to, they will give you simply formula. But understand this. In example one, let's say you are manufacturing and right, you are manufacturing this bottle. In example one, you will have two machines today. Okay, you have two machines, right? And after some of the years, let's say 4 years or 5 years, whatever it is, one of the machine will break down. One of the machine does not work. So what you will do, you will purchase one more machine. You will purchase one more machine. So please tell me, initially you started with the two machines. After some years, one of the machine is not working. You will purchase one more machine. Now, how many machines you will have to produce goods and services? Tell me now. How many machines you will have to produce goods and services? You will have two machines. Any problem? Anybody in the classroom who says, no, sir, I will have three machines? Because the background is simple. One of the machine is not working. Come to the example two. You have purchased the two machines, and after a couple of years, you will purchase one more machine. Same. You will purchase one more machine. But please understand the difference. In the second example, both the machines are working fine. No problem with this. Both the machines are working fine. You will purchase one more machine. So can I simply say, in the second example, you will have three machines. And using all the three machines, you can produce goods and services. And finally, can I say productivity, production in example 2 will be greater compared to whatever is the production in example 1? Anybody disagrees? Let me know right now. Production in example 2 will be greater compared to production in example 1. Can I go forward? Now, why is this important? Why is this logic important to understand? Point number one, a machine is produced. A machine is produced. Is it counted as a part of GDP? Let me know. This machine which is produced, you're purchasing this machine, let's say hypothetically in 2023, in this month only. This machine is produced, you will purchase in July 2023. Is it counted as a part of GDP? Yes. Even in second example, is it counted as a part of GDP? Again, answer is yes. But don't you think the GDP value which is there in the example 2, that is a better indicator compared to whatever is the GDP value in example 1, because this is important, because lot of production that has happened in the example 1 is used for replacing capital. I'll repeat it. In example 1, there is a GDP value, but a lot of this GDP is being used for replacing old capital, whereas in the second example, lot of GDP value is being used to add to the existing capital. Add to existing capital. Now, please tell me, after 2 years, after 3 years, after 4 years, in which of the two examples you think production will be more in the economy? Let me know. Right? In these two examples, let's say after 2 years is over, 3 years is over, and assume nothing else changes. Don't say, sir, what if labor cost change? What if that changes? Don't use any what if. Assume everything else remains the same. In which of the two examples do you think production will be better for the economy? Is it okay if I say example 2? Anybody has a problem with this? Please do let me know. Anybody has a problem with this? Please do let me know right now. Why is this important? It is important for a simple reason. Whenever final goods and services are produced, some of it will be used for replacing capital, and some of it will be addition to the existing capital. And if I take an extreme example, right, that is, let's say, in both the examples, 10 machines are produced this year. Extreme example, I know that. 10 machines are produced which are part of GDP. Now, all these 10 machines are used for replacing existing capital in example 1. And in example 2, again 10 machines are produced this year. All the machines are addition to the existing capital. Whatever has been purchased by the companies, they already have working machines. They want to produce more, hence they have purchased 10 more machines. Now, don't you think in example 2, over a period of time, the productivity production will be much, much higher compared to example 1? This is a basic idea. Remember this example. Why it is relevant? Let me explain to you. Whenever you talk about any economy where production of goods and services takes place, capital will be used. Anybody has a problem with this? I'm starting from the basics now. Whenever you talk about any economy where there's a production of goods and services, capital will be used. What is the example of a capital? Best example of capital is machineries, manufacturing facilities, etc. Now the argument is simple. Higher the amount of money that we spend, higher the amount we spend in replacing the capital, it will withhold our production. It will reduce our production compared to a situation where capital is there and it is added to the economy to existing capital. Any problem with this? Any problem? Please do let me know. And whenever we spend money to replace existing capital, this is called as depreciation. And those who are there from the commerce background, do not complicate it. I'm talking generally. Those who are there from the commerce background, I know the habit. You'll start giving me the definition of a depreciation. You will tell me, sir, depreciation is like this. There are two methods to calculate depreciation. That is not required for GS paper 3. For rest of you, please do let me know if there is any problem. Imagine you have a machine. You have started a manufacturing facility to manufacture this bottle. After a couple of years, one machine will not work. You'll spend a 10 lakh rupees to purchase a new machine. Can I call this a 10 lakh rupees as a depreciation? Please do let me know. Can I call this a 10 lakh rupees that you have spent to replace the existing machinery? Can I call this as a depreciation or not? Right? Anybody has a problem with this? Anybody is right finding it very difficult? Please do let me know. Now, why this is relevant? Right? Why this is important? Please understand this. Let's say I will give you GDP value is 100 crore rupees. Please do tell me, can you find out, assuming 100 crore is right worth of 10 machines? I'm taking extreme examples to make you understand. Okay. Let's assume only 10 machines, final goods and services. 10 machines are produced in India. Each of the machines will cost you 10 crore rupees. So 10 machines each will cost you 10 crore rupees. Means what? GDP, assuming nothing else is produced, GDP will be 100 crore rupees. Now please tell me, using this value of 100 crore rupees, can you find out? Can you find out how many of these machines are addition to the existing capital? How many are part of depreciation? Please do let me know. Right? The GDP value is 100 crore. Is it possible for you to find out how much of this 100 crore rupees is used for addition of the capital and how much is new capital? You will not be able to find out. Yes or no? If anybody has a problem, please do let me know right now. You will not be able to find out because GDP means what? Market price of all the final goods and services produced. In GDP, we do not distinguish between machine, which is a new machine adding to the capital. No. Is it a machine replacing a capital? Again, answer is no. But don't you think we should be able to find it out? We should have one more indicator which will tell us whether this capital which is adding to the economy, this new machine, is it going to replace or is it going to add? We should be able to find out. That is the precise reason there is a new indicator called as net domestic product, NDP, net domestic product. And what is this net domestic product? It is basically the market prices of all the final goods and services which are produced in India after deducting depreciation. Any problem with the formula? Please do let me know. Or definition, please do let me know. I'll repeat it again. NDP is nothing but market price of all the goods and services which are produced in India after adjusting for depreciation. Because what if out of these 10 machines, two of the machines worth 20 crore rupees are for replacing old machinery? Then can I write the formula like this? NDP is equal to GDP of 100 crore rupees minus 20 crore rupees. NDP will become 80 crore rupees. Any problem with the formula? Please do let me know. Which means, right, in the economy today, although the GDP value could be worth 100 crore, all of it is not going to add to productivity in the future, because some of it is for replacement of the capital. That is basically the indicator of NDP. Now, please do tell me, between GDP and NDP, can I conclude and say NDP is a better indicator? Anybody has a problem? I'm giving you a statement. Between GDP and NDP is a better indicator. And I'll give you one more statement. I'll give you one more statement. If the gap between GDP and NDP, if the gap between GDP and NDP becomes very large, gap means what? The difference between GDP and NDP becomes very, very large. Then it simply means that lot of depreciation is taking place in the economy. I'll repeat the statement. Please do let me know. If the gap between GDP and NDP keeps on getting extended like this, it is an indicator that lot of the production that you're doing is not addition to the capital. It is replacing old capital. Then don't you think that's a problem? Yes or no? Don't you think that's a problem? Then what should be a feasible indicator? Then what is the indicator which is correct? We'll simply say that the gap between NDP and GDP should be very narrow. I'll repeat it. The gap between NDP and GDP should be very, very narrow. Meaning what? I'll just give you an example. What if I say GDP and NDP both are worth 100 crore rupees? Please do let me know. In this example, GDP is 100 crore, 10 machines are produced, and I'm telling you GDP and NDP both are equal, 100 crore rupees. What is the indication? What is the indication? Can I say indication is that all the 10 machines which are produced in India this year, all of them will be used for producing more. All of them, all the 10 machines are addition to the capital. None of them are replacing old machines. Then don't you think in the coming days, assuming everything else remains correct, production would increase for Indian economy? Yes or no? Production for the Indian economy in the coming days is going to increase because the depreciation is very, very low. In fact, in this example, it is 0 rupees. Can I go forward with this? Any problem with this? This is what UPSC will test you. I hope you understand. Every book will give you formula. I have seen, I'm pretty sure you also have seen it. Every book will give you formulas. But what is the indication of the formula? What is the importance of it? You should know it better. Okay, so this is a net domestic product. And just to make it much more clear, I've given you one example. Please have a look at it. Let's say there are only two companies in India. Only two companies. Company A and Company B. Company A will produce, right? Have a look at this. Company A has produced one machine and Company A has sold it to Company B. And the value of the machine is, let's say, 1,000 rupees. And Company B will use the machine and produce a goods worth 2,000 rupees, sell it in the market. Now, if you calculate GDP, machine is part of the capital, right? The final goods and services produced in the economy should be how much? Right, 1,000 rupees plus 2,000 rupees, 3,000 rupees. But what if I say Company B has purchased the machine to replace existing capital? The Company B has purchased this machine to throw away the old machine and use a new machine. Then in that context, the NDP will become 3,000 rupees minus 1,000 rupees, that is 2,000 rupees. And this is how GDP, NDP, GNP, etc. are calculated. Can I go to the next one? Any problem? Can I go to the next one? Anybody has an issue with respect to what we have discussed? Please do let me know. What about purchasing of new machines? My dear, if you are a company, right? Many of you keep on asking me, sir, how will they come to know whether this is a new machine, old machine, etc.? Whenever you're a company, you will submit all this data to the government. For example, for example, on what basis government will come to know how much is your profit? On what basis government will allow you to pay this much amount in the form of taxes and stop there only? Don't you think you'll have to submit documents to government? I hope you understand. Don't you think you'll submit documents to the government? Government will come to know how much was your depreciation. Government will come to know how much was the final goods and services produced, etc. That's a basic idea. Okay. Last example not understood. My dear, A has produced a machine, sold it to B. You are the owner of B. You have purchased a machine worth 1,000 rupees and you already had a machine, but you throw it away. Basically, because it is not working, you throw it away. There itself, you can understand the machine that you have purchased worth 1,000 rupees is nothing but depreciation. Yes or no? It is nothing but depreciation. So, if you calculate GDP, company A has produced 1,000 rupee worth of the machine, and company B has produced 2,000 rupees worth of goods and services, sold it in the market. So, GDP will be 3,000 rupees. But when you calculate NDP, the 1,000 rupees is nothing but depreciation. So NDP is nothing but 3,000 rupees minus 1,000 rupee depreciation, that is 2,000 rupees. That is what I've given. NDP is a 2,000, GDP is 3,000 rupees. Okay, that's a basic idea. Next, net national product. What will be the NDP for company A if calculate individually? My dear, company A, has company A purchased any machine? You tell me. I'm not given that situation. You tell me. Has company A purchased any machine? No. Right? So, where is a question of depreciation in the context of company A? So, overall, we are calculating for the economy. Okay. Next, net national product. NNP. The last indicator for you people. Net national product. NNP. Now, what is this NNP? Now, please focus on this. First one is net. Net means what? We are taking care of depreciation. Anybody has a problem with this? We are adjusting for depreciation. That's the reason I've written net. Second one, national. National means what? Whatever is produced by the residents or the nationals of India, only that will be counted here. So what is a net national product? NNP? NNP is the market price of all the final goods and services, whatever is produced by residents or the nationals of a country after adjusting for depreciation. I'll repeat it again. Definition is there in the slide. Please have a look at it. What is NNP? It is the market price of all the goods and services which are produced by residents or the nationals of a country after adjusting for depreciation. Any problem with the definition? Which means if you start from GDP, starting point is GDP always. If you start from GDP, I want to get net. How do you get net from GDP? You have to adjust it for depreciation. Agreed? You'll have to adjust it for depreciation. And whatever you get after depreciation, it is called as NDP. Right? But I want net national product. I will also have to adjust for net factor income from abroad, NFIA. So after adjusting for depreciation, after adjusting for production done by only Indian nationals, whatever you get is called as NNP, net national product. Now please do tell me between GDP, GNP, NDP and NNP. I've written four indicators here. 1, 2, 3 and 4. Please do let me know which is the most qualitative indicator. Which is the most qualitative? Qualitative in the sense, looking at that data, you can simply say, okay, Indian nationals have earned this much. Right? Indian companies, right, have produced so much, etc. Don't you think NNP is the most qualitative indicator? Anybody has a problem? Please do let me know. Don't you think NNP is the most qualitative indicator here? That's the reason. I'll come back to this slide. Have patience. Please look at this table. Do not buy at anything. Please do not buy at anything. Now, this is one more assignment to you. What is the assignment? After the class is over, not now, after the class is over, go to Google and type Per capita income. I've not discussed, I'll discuss it. Per capita income of India has doubled since 2014. This was there in the newspaper in the last 4 to 5 months. You will get the articles, don't worry. Per capita income of India has since right doubled since 2014, and you will get the data like this. In 2014, per capita income was somewhere around 86,000 rupees, around 86,000 rupees, and right by 2022-23, per capita income has become somewhere around 1.73 to 1.74 lakh rupees. They will write like this, right? Around 1.73 to 1.74 lakh rupees. That is the newspaper article. You will get in the Google, don't worry. But when they say, right, the per capita income, etc., what is the indicator they are taking? And what is the indicator? Should they be taking GDP? Please tell me, is a GDP good indicator for how much income we are earning? Let me know. Is GDP a good indicator for how much income all the Indians are earning? No, don't you think? If they're talking about per capita income, NNP is the best indicator. Anybody has a problem? Please do let me know. NNP is the best indicator. That's the reason. Please look at it. Please look at the data, and later you can check it in the newspaper. You will get this as the right one. Per capita income, that is per person. Per capita means per person, right? NNI, net national income. I use the term NNP, they will use net national income. Net national income for 22-23 is recorded around 1.72 lakh rupees. From 86,000 rupees, it is somewhere around 1.72 lakh rupees, which means per capita income, right, for India has actually doubled. But is it a good indicator? Even this doubling of income, is it good, bad? What is the concern? I'll tell you in some time. Don't worry. So, any problem here? Anybody has a problem in understanding why net national product is a much better indicator? It is much better indicator compared to GDP, or for that matter GNP, for that matter NDP, etc., etc. Right, so that is the fourth indicator, NNP, and the formula I've given at the bottom. Please have a look at it. You can write it in a different way. That is, I've written the formula GNP minus a depreciation. Don't say, sir, what you've written is different from what you've explained. I've written NNP is equal to GNP minus depreciation. But can I also write GNP this way? GDP plus NFIA. GDP plus NFIA is nothing but gross national product. And from the gross national product, I'm subtracting depreciation. That will give me net national product. Same formula in different way you can write. Either take GDP, adjust it for net factor, then you'll get GNP, or take GDP, adjust it for depreciation, you will get NDP, then adjust accordingly, you will get NNP, net national product. Right, so net national product considers all the goods, that is final goods and services, which are produced by the nationals or the residents of a country after adjusting, after accounting for depreciation. That is NNP. Can I go forward here? Any problem? Can I go forward? And anybody has a problem why NNP is a better indicator compared to remaining, right, three, that is GDP, GNP, as well as NDP? Please do let me know right now. And right, one more concept, last concept for you people regarding indicators. NNP at factor cost. Now let me ask you a very simple question. I will write two things here. One is net national product at market prices, and net national product at factor cost. Please do tell me, and I hope you remember the formula. Please do tell me, if you want to find out how much is actually the profit earned by Indian companies, how much is the salary earned by Indian nationals, etc., which one do you think is a better indicator? NNP at a market price or NNP at factor cost? Let me check. Please be very careful. Right? There is a reason why I'm asking. There's a particular reason for this. I'm asking you, let's say, right, you want to find out how much is the total salary earned by Indian nationals, how much is the total profit earned by Indian companies, how much is the rent earned by Indian investors, etc. Between factor cost and market prices, which is a better indicator? Don't you think factor cost will give you a better information compared to market prices? And those who are still wondering why factor cost is a better indicator compared to market prices, if your objective is to find out salaries, etc., etc., if you want to basically find out market prices, what do? You will add taxes. Do you remember the formula? You will add taxes and subtract subsidies. Don't you think taxes and subsidies will distort the number? Let me know. Right? The taxes and subsidies, if you want to find out, okay, how much is the per capita income of Indian? You want to find out how much is right a profit earned by Indian companies. Do you think NNPAT market price, which includes the subsidies, which includes the taxes, is a right indicator? Don't you think if you exclude, if you adjust for both of them, you will get factor cost? That is a much better indicator. Any problem with this? Any problem? So what I'll do is, I have NNP at market prices. Yes, I already have NNP at market prices. Now, can I calculate NNP at factor cost? Yes or no? I have NNP at market prices. Right? Many of you ask me, sir, how do you say you have NNP at market prices? This NNP that you have calculated, is it at market prices or not? Please do participate and let me know so that I know that you are able to understand it. You have calculated NNP here. Is it at a factor cost or at market prices? It is at market prices because GDP, GNP, etc., everything is at market prices. So now we know two things. One, this NNP is at market prices. Second, compared to market prices, at factor cost is a better indicator. So what I'll do? I will adjust. I know the formula. I'll make adjustments. That is, the formula is very simple here. We will start like this. Factor cost plus indirect taxes minus subsidies. We know this will give me market prices. This will give me market prices. Now take both of them, transfer it on the other side. Take both of them, transfer it on the other side. Can I write the formula like this? Then market prices is equal, market price minus taxes plus subsidies will give me factor cost. Will give me the factor cost. Please look at this formula and tell me, is there any confusion, doubt in this formula? Let me know. Please look at the formula and tell me, is there any confusion or a doubt? That is, we know that we have NNP at market prices. I will adjust NNP at market prices with the taxes and subsidies. I will get NNP at factor cost. And that is the precise reason NNP at factor cost is considered to be the purest form of the income. Right? NNP at factor cost is referred to as purest form of the income. Because please look at what we are counting in factor cost. We are counting wages, we are counting right interest, we are counting profits earned by the companies, etc. In factor cost, are we including taxation of the government? No, we have moved it away, we have taken it out of this, right? Because factor cost, how do we calculate factor cost? Factor cost is basically the expenditure that the company will incur on land, labor, capital, and entrepreneurship. Is there any taxation here? Please do let me know. Is there taxes counted in the factor cost? No, taxes are not counted. So can I simply say, because we are counting only the expenditure, or let's say the income earned by the on the factor cost, it is the purest form of the income, purest form, right? No subsidies are included here, and even right the taxes imposed by the government also excluded. That is the reason the NNP factor cost, it is referred to as a purest form of the income. Purest form. Right? Any problem now? These are the 5 indicators. Please go through them again. If there are any issues, please flag it. If there are any doubts, please do let me know now. Shouldn't the total amount in hand should be better indicator? My dear, total amount in hand is what? Are you talking about the salaries? Are you talking about let's say the wages, etc.? What is the indicator that you're talking about? Please do let me know. Okay, any doubts here? Any doubts? Just to summarize, please understand, just to summarize, right? Just to make it much more easier for you to revise, remember, etc. What we have discussed, we started with GDP, correct? We started with GDP, gross domestic product. And in case of India, in case of rest of the world, what is the indicator used? GDP only, gross domestic product. And using GDP, we calculated one more indicator, that is GNP, gross national product. And how do I get gross national product? GDP plus NFI, net factor income from abroad. Then we use the GDP to calculate one more indicator, that is NDP, net domestic product. How do I get net domestic product? GDP minus depreciation. Right? This was the first one, this was the second one, this was the third one. Then we went to the fourth one, that is NNP, net national product. That is basically GDP, right, plus NFIA minus, right, the depreciation. This will give me net national product. And in addition to this, I gave you one more formula, that is NNP at factor cost, that is equivalent to NNP at market prices, NP at market prices minus taxation, that is indirect taxes, plus subsidies. These are the five formulas that I've given to you, and these are generally used to represent, right, any economy for that matter. What is the market price of final goods and services produced by only Indians, by all who are producing in India, right, etc., etc. These are the five formulas. Anybody has a problem, please do let me know. Otherwise, I'll go to the next indicator, per capita income. Any problem? Anybody has any doubt? Please do let me know. Nobody wants to ask questions also now. Why? Fifth number, my dear, NNP at factor cost. Just now we have discussed this. NNP at factor cost is nothing but NNP at market prices, take taxes, subsidies, transfer it on the other side. That is, it will become minus indirect taxes plus subsidies. Point number 4. Arre Baba, you're basically going back now. NNP is nothing but the market prices of all the goods and services produced by Indian nationals, Indian residents, after accounting for depreciation. Right? Many of you simply says the formula is different. I've explained all of this to you. Please have a look at it. Please have a look at it. I'm not introducing anything new to you. Nothing is new. What I've discussed so far, I'm writing the same thing. Right? That is NNP is equal to GNP minus depreciation. Can I write GNP this way? That is a GDP plus NFIA. NFIA, yes or no? GDP is nothing but, I'm sorry, GNP is nothing but GDP plus NFIA. Right? So I've replaced that, directly written the formula. Okay, done. Right? So these are the five indicators. Please go through this again. Right? Initially, it will be confusing because everything is new to you. But if you revise it once or twice, automatically everything will become clear. Okay, done. Why did we move to make market price for GDP calculation, my dear? I told you this. 1990s, United Nations introduced a new system. In fact, please check last week's PPT. There will be one annotation. I've written the term SNA, Systems of National Accounts. United Nations introduced in 1990 a new system which is called as a SNA. And as per that system, they argued that because the subsidies will vary from one country to another country, the taxation will vary, depreciation rates will vary, etc. Rather than using any indicator, rather than calculating at a factor cost, we should calculate GDP at market prices. And that is the precise reason globally it is acknowledged now, it is used that GDP at market prices will be the indicator. Okay, now what are the limitations or issues regarding GDP calculation or national income calculation? One, data collection is very, very difficult. Data collection is very difficult. Let me give a very simple example. Now, let's say you will finish the class, you will go outside, you will have a cup of coffee or cup of tea, substitutes, doesn't matter. You will go outside, right? And there is a roadside vendor, a roadside seller. You will go have a cup of tea. Now, please tell me, do you think government of India will be able to get that final market price of the final goods and services that you have consumed on daily basis? Let me know. Right? Do you think government of India will be able to come to know whatever final goods and services you have consumed in the market? Answer is no, not. It's not possible. I gave you one example. You did not go to, let's say, any registered restaurant. You went to a roadside seller, right? You went and had, let's say, a plate of idli. You had a plate of rice and dal. You had a cup of tea. Do you think all of them are registered with the government? Do you think government knows how much money you are paying for all of this? Answer is no. So collection of data, don't you think that's one of the very much limitation related to GDP calculation in India? And this is not just for India. Generally, this is a limitation. Second one is a time lag. Time lag simply means the time taken for publishing data. Time taken for publishing data. And let me ask you a very simple question. Let me make you understand. Let me make you understand. Today, in the newspaper, you know that WPI is minus 4%. Yes or no? I'm not giving you exact number. Don't worry. You can check the Hindu newspaper. For that matter, any newspaper. Today, you know that WPI is minus 4%. And don't worry, those who are worried what is WPI, etc., just give me some time. Next chapter is inflation only. Which means in the last month, that is in the month of June, you're in July, by the way. In the month of June, the market prices of certain goods has gone down. That's a meaning. Minus 4% means prices have gone down. Now, please tell me what has happened in the last month. You're able to know today. Don't you think the market situation today would be different compared to what it was in the last month? Let me know. What is the market situation today will be different compared to what it was in the last month. And those who are saying no, my dear, do you think tomato prices are same in this month compared to last month? Tell me. Fuel prices are same in this month compared to last month. Or for that matter, you come to know that in the last quarter, I hope you understand, I'll introduce a new term now. That is GDP. One is GDP and the other one is a GDP growth rate. In the newspaper, you'll come across the term GDP growth rate. What do you mean by GDP growth rate? GDP is the absolute value of the final goods and services. The absolute value of final goods and services. Whereas the growth rate, it's a comparison. It is comparison. Sir, what do you mean by comparison here? Let's say GDP has increased from 100 rupees to 110. Can I say GDP growth rate is 10%? Any problem? Please do let me know. Can I say GDP growth rate is 10%, whereas GDP is 110 rupees? Most of you will simply say both are one and the same. GDP is absolute value. What is the absolute value? That is, what is the market price of final goods and services? 110 rupees. But what is the GDP growth rate? We are making a comparison and we are saying compared to last year, this year, the GDP value has increased by 10%. Now, follow the next argument very carefully. I said it is the National Statistical Office, NSO, which will publish the data for GDP growth rate. And let's say for the month of January, February, and March, for the month of January, February, and March, whatever is the GDP value as well as the GDP growth rate, that will be published in the month of May. It is published in the month of May. So tell me now, in the month of May, you will come to know that your GDP growth rate has fallen, not 10%. It is, let's say, minus 2%. So in the month of May, you come to know that GDP for January, February, and March has fallen. It has not increased, it has fallen. So don't you think the time taken for publishing data is very high? And what is the problem with this, right? The time period that is taken. If the time taken for publication is very high, whatever reforms you are introducing in the month of May, you already, right, are facing a problem there. The problem is that market may not be the same in the month of May. Any problem with this point? Please do let me know. Otherwise, I'll go forward. In simple terms, the situation is different. Now you come to know in the past, Indian economy has gone down. So today you are implementing reforms. Don't you think you're already late to the party? The situation has already changed. So you are implementing reforms now. That is basically the problem with the time lag. That is a problem with the time lag. And before you ask me, sir, then there should not be any time lag. My dear, Indian economy is not very small. If only 10 companies are there, easily I can collect the data and publish the data. Do you think Indian economy consists of a very few number of companies? Do you think collection of data throughout the length and breadth of India is very easy? Answer is no. And because there are a lot of complications in terms of collection of data, utilization of data, etc., etc., there is always a large amount of time taken by the authorities to collect and then give the result. That is the second limitation. Third limitation, non-monetized consumption. The third one is non-monetized consumption. Now, what do you mean by monetization here? Please remember the term. Monetization means generating revenue. Very simple. Monetization simply means generating revenue. You will generate revenue by selling an asset in the market. For example, if I'm a manufacturer, follow this very carefully. If I'm a manufacturer, I will sell the bottle to you at 100 rupees. Can I call this 100 rupees as a market price? Can I include this in the calculation of GDP? Any problem with this example? Let me know. Any problem with this example? Second example, right? You have a land, agriculture land. I will come to you. I will work for 1 month on your agriculture land. And after 1 month is over, you will give me 10 kgs of rice. You're simply giving me 10 kgs of rice. Please tell me, can you include this in the calculation of GDP? Possible? If you say possible, then what is the market price of it? Don't you think there's a difficulty here? Right? There is a non-monetized consumption. Non-monetized consumption means, please understand, monetization means what? I said you are selling something, you are earning revenue on it. In this example, I'm selling, I'm giving you labor services. Am I able to generate money on it? No. Is there a market price you are giving, right? You're attaching to my services? Again, no. But you are giving me something else for consumption purposes. This is a non-monetized consumption, barter system. In simple terms, barter system. In barter system, which happens in a rural part of India even today. I hope you understand. Those who are there in very, very poor villages, they will know that all the people may not accept a payment in the form of money. They will get in return something else like this. It could be, right, let's say paddy, it could be rice, it could be wheat, etc. So whenever there is a non-monetized consumption, there is no market value given to a good or a service. Hence, it will not be counted when you are calculating GDP. I'll give you one more example. Imagine I'm a farmer. I've grown 100 kg of rice. Will I sell all the 100 kg of rice in the market? Think rationally and tell me. If I'm a farmer, I've grown 100 kg of rice. Will I be selling all the 100 kg of rice in the market? No. I will take, let's say, 2 kg of rice, give it in my own house. Yes or no? I will use it for my own self consumption. So, don't you think some of the production is done, but there is no market price of this? So, do you think in calculation of GDP, we should be counting all the 100 kgs market price of rice to calculate GDP? No, we are not counting all the 100 kgs, we are counting only 98. But how much is the production? 100 kgs. So, I hope you understand. There are a lot of complications here, lot of complications. Parallel economy, black money is not counted anyways, doesn't consider what is the impact on ecology, whether are we polluting more and more, are we destroying the forest, etc. So what is the impact of growth on the economy? That is also not counted when you calculate GDP numbers, right? So these are some of the limitations or issues whenever you talk about national income aggregates, right? So this is the discussion. Let me go to the next important indicator, per capita income. PCI stands for per capita income. Now, please have a look at this. Per capita income simply means On an average, how much is the average earning? Remember the term. How much is the average earning of a national or a resident of a country? How much is the average earning of a resident or an individual of a country? It is called as per capita income. For example, let me give you the data that I've used already. I said that the per capita income of Indians has become 1.72 lakh rupees. 1.72 lakh rupees. Question number one. Does it mean that everybody in India is earning 1.72 lakh rupees? Please do let me know. Is this per capita income when the government says we have doubled it from around 86,000 rupees to 1.72 lakh rupees? Does it mean that every one of us is earning 1.72 lakh rupees? Please participate and tell me. You don't have to become an economist for this. You know the fact. Right? Please look at your left, right, in your village, in your city. Do you think everybody is earning 1.72 lakh rupees? Answer is no. But then you'll ask me a question, sir, how did we arrive at 1.72 lakh rupees? Answer is very simple. Imagine there are three people. I'll take a simple example here. Imagine there are three people A, B, C. A is earning, let's say, 20 rupees. B is earning 30 rupees. C is earning 50 rupees. What is the total income here? What is the total income? Total income is 100 rupees. And right, let's say three people are there, population of a country. So per capita income in this example will be how much? 33.333 rupees. Then 33.333 rupees. But does it mean that everybody in the economy is earning 33 rupees? Doesn't mean that. Don't you think if you talk about per capita income, that will not give you, right? That will not give you, right, the income inequality that is present in the system. Let me know. If you talk about per capita income, right, don't you think that will not give you the income inequality that is present in the system? For that matter, please understand, can the GDP provide you the data of income inequality? Let me know. Can the GDP give you the data of income inequality? Again, answer is no. Can NNP give you the data of income inequality? NNP factor cost. Can that give you how much is the income inequality? No. Right? These kind of indicators, these are economic indicators. Is it okay? These are economic indicators. These generally do not provide information about how much is right the income inequality which is present in the system. And right over a period of time, your per capita income might increase. Your per capita income might increase. For example, here per capita income is how much? 33 rupees. What if I say per capita income of India becomes 70 rupees? Assuming same three people are there, have a look at this. Imagine per capita income of India doubles from 33 rupees to 70 rupees. What if the situation is like this? It is 70 rupees because A is earning 0 rupees now, B is earning 10 rupees, C is earning 200 rupees. Please tell me, right, though per capita income has increased, has it addressed the issue of poverty in India? Look at the two examples and tell me, has it reduced poverty in India? Don't you think in the example 2, in fact, in the example 2, situation of poverty in India is much more concerning compared to situation 1. In situation 1, A was earning 20, B was earning 30 rupees. In situation 2, A is earning 0 rupees, B is earning 10 rupees, which means for this population, the quality of life, a standard of life has become much lower. Right? Their expenditures have deteriorated. They have come down. But per capita income of India has more than doubled. Apply the same logic even as a criticism to the present per capita income. Is the logic okay? Apply the same logic, right, even to the present argument of per capita income. No doubt, per capita income in India has a doubled. From 86,000, around 86,000 rupees to 1.72 lakh rupees. But it doesn't mean that everybody is earning 1.72 because it is simply an average. Second, has it reduced poverty in India? Is there no poverty in India? Of course, no. Poverty in India is also very, very high. And third point is important. Please have a look at it. Generally, whenever you talk about national incomes, GDP, GNP, etc., etc., there are two ways that they calculate national incomes. One, It is called as a current market price. One is called as current market price. One is calculated at current market price. And second one is calculated at constant market price. Constant market price. Now you'll ask me, sir, what do you mean by current market price and constant market price? Let me give a very, very simple example. Imagine today you will manufacture and assume only one bottle in India. I hope you understand the argument. Assume only one bottle is produced, right? That's a one final goal. So today, the market price of this bottle is 100 rupees. Only one good, final good and service is produced and sold in India. Can I say GDP of India is 100 rupees? Any problem? GDP of India is 100 rupees. Next year, imagine cost of plastic goes up. Think of this. I'll ask you a question after that. Cost of plastic goes up. Government will impose more taxes on the manufacturing of the bottle. Right? Let's say even the cost of steel also goes up. Now, please tell me, when all of this will happen, what will happen to the market price? Do you think you will be able to sell it at the same market price? Of course, no. You will have to increase the market price. Let's say you will sell it in the market at 120 rupees. But please look at it and tell me now. From last year to this year, GDP has increased. Yes or no? From last year to this year, GDP has increased. But don't you think, in this example, the rise in the GDP is not because of more production, it is because of higher market prices of the inputs. Any problem with this? Let me know. In this example that I'm talking about, GDP has increased, no doubt. But the rise in the GDP is not because we are producing more. The rise in the GDP is because the cost of the inputs has increased. Your labor cost could have increased, right? The plastic cost would have increased. The government taxes could have increased, and that will lead to higher GDP value. But tell me, is this GDP number a good indicator? Is it a good indicator to find out how much is the quality of life, how much everybody is earning? Again, answer is no. Why? Because this rise in the GDP is not because of a higher production, it is because of higher input cost, higher steel prices, higher taxation of the government, etc. And that is the reason, please understand, there are two ways to calculate GDP, or for that matter, GDP, NDP, etc. etc. One, whatever is the existing market price, whatever is the price of the bottle today, simply take it and calculate GDP. And second method is, there is one more price which is called as a constant price. And we'll discuss that. We'll discuss that. Have patience, because I want to explain to you what is a base year and how do we use the base year to calculate constant prices. Done? So these are certain important pointers regarding per capita income. So per capita income for India is around 1.72 lakh rupees. But it doesn't mean, it never means every one of us is earning 1.72. Nor does it mean income inequality has reduced. Nor does it mean poverty has been eradicated. Right? You might see on one side, PCI keeps on increasing, and on the other side, all of them will continue to exist in the economy. That is the issue with the idea of a per capita income. So have a look at this. It is just an average. It is just an average. Second, it does not provide information about contribution of various sectors. For example, if I say per capita income of India, right, is 1.72 lakh rupees. Can you tell me how much of this has come from manufacturing sector? Can you tell me how much of this has come from services sector? Answer is no, because the overall per capita income is simply 1.72 lakh rupees. The standard or the quality of living is affected by the government expenditure as well. Now, what do you mean by this? Remember this, per capita income is generally used to represent standard of living. There is a better indicator than this also, we'll discuss that later. The per capita income is always used to represent quality or the standard of living. For example, I'll give you a data. Please tell me. Between 2014 to 2022, per capita income for India has doubled. Now, can I also make a conclusion and say it means standard of living in India has improved? Anybody has a problem with this? It means a quality of right life in India has improved. Does it indicate or not? Does it mean that or not? Right? But please understand, there's a counter argument to it. That is, you might use per capita income to represent the standard of living, but don't you think how much is the government expenditure on poor people? How much is the government expenditure? That will also have an impact on standard of living. For example, imagine there is a poor person. A poor person is earning only, let's say, 10 rupees per day. He is earning only 10 rupees per day. Please tell me, can you make a conclusion on only this 10 rupees per day? What is the quality or the standard of living of this person? Think of it and tell me. After this, we'll take break. Have patience. We'll take break. Don't worry. I'll give you a lot of breaks today. Right? So the person is earning 10 rupees per day. Now, please tell me, based on this number that is 10 rupees per day, can you make a conclusion? What is the standard of living of the person? Can you simply conclude, okay, the person is right not able to afford this, etc., etc.? That would be wrong. Why? I'll tell you. What about government assistance to this person? Right? Don't you think in many of the state governments, many of the states, the state government will provide electricity free of cost to this person? The government might provide 6,000 rupees per year for this person. The government might provide housing facility, education facility, right? Or for that matter, let's say healthcare facility or LPG, right? Connections can be provided free of a cost. So that's the argument here. Per capita income is always used to represent what is the standard of the quality of living. But in addition to the per capita income, right, there is also government expenditure which will have an influence over the standard or the quality of living of the people. That is the third concern. And finally, right, it does not provide a quality data regarding how much is how much is your purchasing power. Meaning what? In India, the per capita income is 1.72 lakh rupees. Can you make a comparison with USA citizen? And only on this, can you conclude whether our purchasing power is better or their purchasing power is better? Think of it. I'll just throw an arbitrary number so that you can understand what I'm referring to. On one side, I'll write India's per capita income is 1.72 lakh rupees. USA's per capita income is, let's say, I'm just throwing arbitrary number, let's say $100. Based on this, can you make a conclusion? Only looking at this data, can you make a conclusion whether our numbers are better or their numbers are better? You should not make a conclusion. Please understand. Never make a conclusion on this. Why? You know what is the price of this bottle in India? You know what is the price of this bottle in USA? Can you find out that using only this data? I hope you understand this. What if the price of this bottle, for example, let me make it very, very amply clear to you. What if the price of this bottle, I'm taking extreme example, is let's say, right, 1 lakh rupees in India. Don't ask me, sir, bottle is made of what? Price of this bottle is 1 lakh rupees in India. And price of this bottle is $2 in USA. Now, can you tell me whose per capita income is much better? I hope you understand the argument here, right? Based on this, you will make a conclusion. Though our per capita income is 1.72, we will not be able to purchase even 2 bottles in India. Whereas in case of USA, they'll be able to purchase 50 bottles. So their earnings are much better, right? Based on the purchasing power compared to our earnings. So that's the reason per capita income does not give you all of this information. It will simply tell you on an average how much each of the Indian is earning, how much each of the Indian national is earning. Done. And for this, please have a look at this. We'll discuss one more concept called as purchasing power parity. Those who are asking what is PPP, PPP stands for purchasing power parity. And we'll discuss this. Don't worry. Right? Today is the second day. Have patience. We will discuss this as well. There is a concept called as purchasing power parity. We'll discuss this in the one of the chapters by the name of international trade. I will tell you what is appreciation, depreciation, how inflation will have an impact, etc. etc. We'll discuss. Please don't worry about it. Done? So these are certain important concepts regarding per capita income. Next is the idea of a virtuous and vicious cycle, right? But we'll take this up after the break. Before the break, if you have any doubts, please do let me know. Is PCI calculated monthly or annually? You tell me. What do you think is a better indicator? Will you be able to calculate PCI monthly? Right? Think of it. If you say yes, sir, we can calculate PCI monthly, that means you should have GDP monthly. Do we calculate GDP monthly? Think of it and answer. Do we calculate a GDP monthly? Have I given the answer to you already regarding GDP calculation? We calculate GDP quarterly. I hope you remember this. We calculate a GDP quarterly, right? So because we calculate GDP quarterly, which means you can calculate national income also quarterly, right? Obviously, annually, right? Full financial year you can calculate. Okay, sir. Non-adults also included in per capita? Yes, right? The whole population, Indian nationals, everybody is counted. Why only GDP is used when NNP is a better indicator? No doubt, NNP at factor cost is always a very good indicator. Much better quality data you can get. But you tell me, if you want to calculate NNP, you'll have to adjust GDP with the depreciation. You'll have to adjust with NFIA. Do you think NFIA will remain same for every country? Right? Don't you think from one country to another country, NFIA will also keep on changing? What about depreciation? Right? The values of depreciation will also keep on changing from one country to another country. Citing all of this, what we have decided is the one with no kind of adjustment is GDP. So let's run with GDP itself. So that's the reason GDP is always used. Factor cost includes a subsidy. Yes, right? Earlier, yes, factor cost included subsidy. Okay. Anybody has a doubt, please do let me know. I've activated a call feature now. Hello?
Hello, sir. Good morning.
Good afternoon, Soumya. Please tell me.
Good afternoon. Yeah. Sir, I had like two, three doubts. First one is we studied in GDP that it is the production that is taking place in a financial year.
Ah,
My doubt is what if something is manufactured in one year and consumed in another year?
okay. Very, very simple argument. If you have produced this year, I'll take a simple number here. Let's say you have produced 200 rupees worth of goods, but out of this, let's say 100 rupees worth of goods, you will sell it this year. Another 100, you will sell it next year. This will also be taken as a part of GDP. That is whether the goods which are produced, final goods, of course, whether these are sold or unsold, both of them will be counted as a part of GDP. And I'll tell you the argument behind it. The 200 rupees, how did we arrive at 200 rupees? Right? Basically, the cost of labor, right? What about rent, etc., etc. All of that has already been paid. And that's the reason 200 number is there. That is a
But
precise reason.
profit is not included.
It will be
Profit will come only at sale.
you will earn the profit after the sale. But if you have decided, okay, 200 rupees is my market price, on what basis did you decide the market price? You have
Okay,
included
okay.
profit as well. So that is the reason, irrespective of whether it is sold or remains unsold, this will be counted as part of GDP of this year only. Done? Right? In
Okay,
fact,
and
huh,
second doubt I had, sir. Sir, we studied in depreciation that the machines, whatever we are replacing capital, that will not be included. But sir, that also it's a final product for some company which manufactured it in that year.
okay. What I said was, if you produce a machine this year, it will be counted as part of GDP. Is the first point
Uh,
clear with you? It is counted as part of GDP. But what I'm saying is, if you look at the GDP data, it does not tell me how much of the machineries are used for adding to the existing capital, how much are for replacing capital. And because
Okay.
from 1 year to next year, some of the machinery will be consumed. Capital keeps on getting consumed in the economy, right? Today you might throw away one machine, right? You purchase one machine new this year, and your competitor might throw out two machines next year and purchase two new machines. So from 1 year to next year, the addition to the capital will also happen, and replacement of the capital will also happen. But the GDP data will not tell you how much is addition, how much is replacement. So we need to find out one more indicator that can tell me how much of this GDP is getting added as a capital and how much is replacement. That will only be given in the form of NDP.
Right.
Okay.
So, sir, in capital, we will have raw material also. So, suppose somebody is manufacturing steel plate,
Hmm.
and some of the steel that they purchased, it got corroded, it got waste.
Hmm.
So, that will be removed in depreciation.
Depreciation is not generally accounted, is not going to account the capital in the form of raw materials. It is going to account for machineries. That is more
Okay.
important. Machineries, let's say manufacturing facilities, because if you manufacture steel, it is not a final good,
Hmm.
right?
Hmm.
So in calculation GDP, we count only final goods.
Right.
Okay.
Okay.
Huh.
Okay.
Anything else?
And so last one, sir, we studied about income inequality. We cannot find with all these indicators. Then how do we find how much inequality is there in
Okay.
economy?
How many of you have read? This is where current affairs will come very handy to you people. How many of you read in the last 1 week, United Nations multi-dimensional poverty index was published? Tell me.
I read about it.
Yes, right. And don't you think that focuses on development rather than growth? Yes or no? Please
Hmm.
look at the three indicators which are present in MDP, you will understand. So there are indicators which will talk about development, not growth. Development is how the population is getting the benefit of this growth that is taking place in the economy. That is where these kind of indicators which will tell you is the poverty going down, is a hunger going down, etc., etc. Those are the indicators that you look at if you want to talk about inequality.
Oh,
Okay,
okay, sir.
done.
Thank you.
Thank you. Take care. Sachin, I'm making a call because you gave a call. I'm making a call. Please pick up. Okay, great. V Hari, I'm making a call because you have given a call earlier. Please pick up. Ha,
Hello.
Hari.
Good
Yeah,
afternoon,
good
sir.
afternoon. Yeah, tell me.
Sir, last week onwards, I have a small doubt regarding basic price index, sir.
Hmm.
Actually, basic price will be calculated with respect to production, no, sir. Entire product.
Okay. Ha.
But again, we are using it with respect to normal taxes and normal subsidy, no, sir. I mean,
Okay.
product tax and product subsidy.
Ha. Ha.
But here I was some analogy I was trying to say, sir. There we are using like meters, and here we are using like centimeters.
Pardon?
Sir, I mean, production means overall entire product, no, sir.
Yeah. Okay.
We are calculating the basic price upon entire production, not on individual product.
Okay.
And
Ha.
again, we are using that one here with respect to individual products, sir.
Okay.
I have just small out how can we use the same value here.
So production taxes and the production subsidies are for overall manufacturing. It is
Yeah,
not
yes, sir.
individual specific or for individual units. It is overall specific. For example, if I want to basically want to sell this product, let's say individual product. If I want to sell this product, government automatically will impose a GST on this unit. I
Yes.
hope you understand.
Yes.
So product taxes automatically will be per unit.
Yes.
If I sell this in the market, what should be the market price? The market price should include per unit how much tax the government is going to impose. So that is the reason initially we will start with overall whatever is the expenditure incurred, right? For me, in the form of, let's say, excise duties, I'm sorry, in the form of land taxes, in the form of other types of, let's say, professional taxes, etc. Because these are independent. These are not per unit. These are independent. But because I've paid, let's say, professional taxes, I've paid land taxes because I want to manufacture this bottle. Automatically, when I decide to sell this bottle in the market, I will include those taxes. Plus, I will also include GST, which is going to be imposed by the government. So
Uh,
automatically, huh?
I understood that one, sir. I have understood that. What was my doubt is how can we use the same value here? That was for overall production, no, sir. BP.
Huh?
Again, in MP, we are using the same value here
Huh?
for individual product.
Okay.
That will be like 100 for 10 bottles. Then how can we
My
use it?
dear, if you look at the calculation that I've shown to you, the GDP calculation that I've shown to you, please look at it. I've told first industry-wise gross value addition is calculated. Industry wise, then basically you're going to add production taxes, production subsidies, you'll get GVA for this industry,
Yes, sir.
and you will do this for all the industries. Then you're going to add product taxes. This is the methodology that is used by NSO.
Yes.
So don't you think the NSO knows how much production taxes they've collected? This is my question to you. Can NSO get how much is the production taxes that they've collected from the government?
Yes.
Can NSO get how much is the total subsidy provided, production subsidies provided by the government to you?
Yes,
Can
sir.
NSO know that?
Yes,
Of course,
yes.
yes. So that is what I've told you. So initially they will get the data, add it, then individual product they will add it. Right? For example, if 100 units of this are sold, I gave you example of one unit. Let's say per unit it is 10 rupee. Total 100 units are manufactured and sold, which means 10 into 100, that will be tax collected 1000 rupees. So add product taxes there. Again, don't complicate. I can give you the calculations, I can show you exact calculations, but do not complicate. UPC is not going to ask you all of these calculations.
Okay.
Okay,
Okay. Thank you.
done. Okay. So let's take a break now. Let's take a break. So time is 1:57. Let's start at 2 7 p.m. Take a break now. Let's restart the discussion at 2 7 p.m. Okay, let's restart at 2 7. Take a break now. Okay, welcome back. Am I audible? Please do let me know. Am I audible? Okay, let's start. Let's start. So the next concept I want to discuss is the idea of a virtuous and vicious cycle. Virtuous and vicious cycle. Now, these next couple of concepts, that is virtuous, vicious, pro-cyclical, counter-cyclical, etc., etc. These are not there in the books. Please do not search. These are from current affairs. But nevertheless, all the four are very important. Now, what do you mean by virtuous and vicious cycle? Let me start with a very simple example. Very simple example here. All of you know, couple of years ago, Government of India imposed a lockdown. Anybody here who says, right, sir, I've woken up today. What do you mean by lockdown? Please do let me know. And so, Government of India during pandemic imposed lockdown. Okay, and as a result of the government imposing lockdown, what happened? The demand for goods and services went down in the market. And when the demand for goods and services will go down, automatically the production will also go down. And when the production will go down, the number of people will be removed from the jobs. More and more people will lose the job. Unemployment will automatically start increasing. And when unemployment increases, right, people will not have sufficient amount of money to spend for goods and services, right? So the wages or the salaries, right, for the houses that were going, basically went down. And when the wages or salaries will go down, what will happen to the demand? Demand in the market will also go down. And have a look at this. Please tell me now. Can I simply say this cycle is will keep on circulating, or it will keep on self reinforcing itself? Let me know. Can I say this cycle is going to, right, self reinforce itself? Self reinforce means it will keep on happening. That is, demand will keep on going down, production will keep on going down and down, people will be removed from the jobs because the companies will not have sufficient revenues, right, etc. And the cycle will keep on continuing. And tell me, as a result of all of this, what is the outcome? What is the outcome of all of this? Can I simply say all the outcomes because of this will be, right, negative, in the sense GDP will go down, right? The unemployment will also go down. I'm sorry, unemployment rate will go up, right? The production will also go down. Demand for goods and services in the market will also go down, right? And this cycle, this kind of a cycle where the outcomes, have a look at this kind of a cycle where various factors will keep on interacting with each other, enforcing each other or enforcing each other. As a result of this, negative outcomes will be observed. Such a cycle is called as a vicious cycle. Such cycle is referred to as vicious cycle. Any problem with the vicious cycle? Did we experience a vicious cycle very, very recently? Right? Do you know what happened in 2020 or not? You might simply say, sir, I did not learn economy then. But did you observe this or not? During pandemic, government imposed a lockdown. The demand for goods and services went down. Unemployment rate increased, etc., etc. That is a vicious cycle. Example of a vicious cycle. How it will happen? Arey Baba, if people are sitting in the home, will you go and purchase car? Will you go and purchase a two-wheeler? Can you go on a trip? Right? Can you go anywhere? Of course, no. Right? So automatically the demand for goods and services will go down. And if the demand will go down, then do you think companies will produce more? You tell me. You have a capacity to manufacture 200 bottles, but the demand in the market is only 100 bottles. Will you manufacture 200? If you say yes, you're a very, very bad businessman. You'll not manufacture 200, you'll manufacture 100. To manufacture 100 people, 100 bottles, will you require the same number of employees? No. So you'll remove employees. So these employees, right, are not having any job now. If they don't have job, where is the salary? If they don't have salary, will they purchase goods and services? So again, demand for goods and services will go down. It's a very simple concept. Virtuous cycle, exactly opposite. Virtuous cycle is exactly opposite. Have a look at this. Imagine there is investment done in the economy. either by the government or by the private sector, right? Automatically investment will be done. And when investment is done, right, what will happen to employment? Point number one, please tell me, what will happen to employment? Will the employment increase or decrease? Right? Don't you think employment will increase? And when employment increases, what will happen to the demand for goods and services? So the demand for goods and services will also increase. With that, production will also increase. Higher production means, again, employment increases, unemployment will go down, right? Wages or salaries earned by the people will also increase. This is a self-reinforcing cycle. Agreed? It is a self-enforcing cycle, right? The cycle will keep on, right, enforcing or keep on happening again and again. As a result of this cycle, what is observed? One, GDP will increase, employment will increase, the GDP growth rate will also be higher, production will be higher, goods and services demand will also be higher, right? So this is called as a virtuous cycle. So both are cycle. Cycle means what? You're going through the same points again and again. So various factors which will affect each other, which will enforce each other, either will lead to a negative outcome. In that case, it is a vicious cycle, or will lead to a positive outcome. In that case, it is called as a virtuous cycle. Did we experience a vicious cycle very, very recently in the last 2 to 3 years? Yes, we have experienced it. Are we watching a virtuous cycle now where the demand is going up, where production is also increasing, where employment is also getting generated? Again, yes, we are making an observation. Right? This is virtuous, this is vicious. Any problem with vicious and virtuous? Please do let me know. Any problem with either vicious or virtuous cycle? Please tell me, between vicious and virtuous, which one would you prefer? If you're the government of India, will you prefer a vicious cycle or will you prefer a virtuous cycle? All of you will agree, sir, we would prefer a virtuous cycle of growth. Anybody here, he says, right, so no, sir, I would prefer a vicious cycle. No, a virtuous cycle. But there is one problem with that, right? When you have a virtuous cycle, there is one problem. What is the problem? Please understand. On one side, incomes earned by the people will keep on increasing in the virtuous cycle. Correct? In a virtuous cycle, earning of the people will keep on increasing. And on the other hand, production of goods and services and supply of this will also keep on increasing. You're observing both. Production is increasing and income is also going to increase in the market. But please understand, whenever incomes will keep on increasing at a very faster pace, I repeat, whenever incomes are going to increase at a very faster pace compared to the supply, or right, let's say the production of goods and services, can we say we will arrive at a situation in the market where the demand for goods and services will be greater than supply of goods and services? Please do tell me. If the incomes earned by all of us keep on increasing at a very faster pace compared to, right, how much is the production and supply of the goods and services, will we arrive at a situation where demand for the goods and services is much higher than supply of goods and services? And if this is a situation in the virtuous economy, if this is a situation, what will happen to the prices? What will happen to the prices? The prices of goods and services will start increasing. I hope you remember that, right? The demand, if it is more than the supply, automatically prices will start increasing. This rise in the price level, it is called as inflation. Any problem with this? I'll repeat it. If the price levels means for group of commodities, if the prices will start increasing, this is called as inflation. The next chapter is inflation. We'll have a look at it again, don't worry. That is called as inflation. Now, can I simply say one of the outcomes, concerning outcomes of virtuous cycle is inflation? Any problem? One of the concerning outcomes. There are positive outcomes. What is the positive outcome? Production is increasing, supply is increasing, employment is increasing, GDP is increasing, etc. No doubt, these are positive outcomes of a virtuous economy or virtuous cycle in the economy. But is there a concern that in a virtuous cycle in the economy, there could be inflation also? Any problem? There could be inflation also. And whenever there's inflation, please understand the impact of the inflation is that people will not be able to purchase same quantity of goods and services whenever inflation rate is very high. For example, let me throw one very important price point at you: tomato prices. Have you seen the prices of tomato now? Couple of months ago, the prices of tomato were in the range of around 20 rupees per kg. Today, all India average price of the tomato is much more than 100 rupees. Now, please tell me, if you have 100 rupees, when the price of the tomato was 20 rupees per kg, don't you think you are able to purchase a 5 kgs then? And today, let's say 100 rupees, right? You will be able to purchase only 1 kg now. Now, is the logic okay? If inflation is very high, if the inflation is very high, what is the impact of inflation? You will not be able to purchase same set of goods and services when the inflation rate is very high. So that is a concern whenever there is a virtuous cycle in the economy. With virtuous cycle, inflation can go up. And when the inflation goes up, that will have an impact on purchasing power of the people. Can I go forward? Can I go forward? Right? That is a problem with the virtuous cycle. Now, come to the next point here. Pro and counter cyclical policy. Pro and counter cyclical. Pro cyclical and counter cyclical. Now, follow this very carefully. What is the meaning of the term pro and counter? Let me explain. But before that, there is a term called as a business cycle or economic cycle. Now, what do you mean by business cycle and economic cycle? Let me ask you a very simple question. How many of you believe that? Right? Again, there is a hidden agenda here. How many of you believe that GDP growth rate for every country will always keep on increasing? Is there anyone who believes GDP growth rate will always keep on increasing? Question number two. Do you always believe that GDP for a country will always keep on increasing? Having seen what has happened in the last 2 years, think of it and answer. Do you think that GDP will always keep on increasing no matter what? GDP growth rate always will be high no matter what? Of course, no. Don't you think GDP of India is dependent on how much companies are producing? And the companies, when they want to produce, don't you think they will produce the quantity based on demand in the market? I hope you understand. If the demand is very low or demand is not there in the market, do you think companies will produce? No. If the companies don't produce, do you think GDP will increase? No. And that is the precise reason. I hope you understand. That is the precise reason there is a concept of cycle. Cycle means what? In representation, right? In terms of representation, the business cycle is always represented in the form of a sine wave. Do you remember the sine wave? Right? For example, light, right? We say light travels in a wave form. Go back to high school. The cycles in the economy are represented in the form of a wave, right? That is, the GDP will increase but become stagnated at a particular point of time, and GDP will start falling down. GDP will start falling down. GDP will not constantly keep on increasing, it will fall down. And after a certain point of time, when it will fall down, after a certain point of time, it will again start rising up. This is a representation of a curve or a cycle. That is, right, for a longer duration, GDP will keep on moving like this in a waveform. Any problem here? GDP will keep on moving in like a wave. For a certain number of years, GDP will increase. And after that, GDP will fall down. Again, GDP will increase. Again, GDP will fall down. Again, GDP will increase. Again, fall down, etc. etc. like this. This is called as a business cycle. Any problem here? This is called as a business cycle. And always remember this. Business cycle, it is one of the outcomes of capitalism. It is one of the outcomes of capitalism. In fact, I've written it. Please go back to the capitalism picture, or let's say capitalism slide, and have a look at it. I said one of the problems, or let's say concerning or demerit of a capitalism is there is a business cycle. Now you'll ask me, sir, why? Why is it a feature of a capitalism? Please tell me, private sector participation is present where? Capitalism. And private sector, don't you think they will follow demand in the market? That is, in order to earn profit, they will follow demand. Demand means they will look at how much is the demand, and based on that they will produce goods and services. I'll repeat it again. Do not be under the misconception that private sector will invest and create a demand. No, private sector will run behind a demand. For example, imagine you're manufacturing this bottle. You tell me, will you manufacture the bottle, the quantity based on how much is the demand, or you will simply manufacture and basically believe that whatever you manufacture people will purchase in the market? I don't think the first situation is correct. You will basically follow the demand in the market. If the demand is for 200 units, you'll manufacture 200. If the demand is for 100 units, you'll manufacture 100. Why? Please understand. You are going to invest a lot of money. You're going to spend a lot of money. You're not doing charity here. You are not doing any charity. You're a private sector company. So you are running behind demand because you know, based on the demand, you will earn so much amount of a profit. Please tell me, is this the feature of socialism? Let me know. Do you think this is going to happen in socialism? No, in socialism, who is going to invest in socialism? In socialism, it is the government which is going to make an investment. Is government earning for running behind profits? Is the sole object of the government is to earn profit? No, social welfare. Social welfare. Government might incur losses, but they will continue to provide these kind of goods and services to you because they know that, right? No way they can run behind profits in that kind of a situation. So that's the reason business cycle is observed whenever any country follows a certain features of capitalism. For example, tell me, in case of India, don't we follow certain features of capitalism? That is mixed economy. No doubt you can simply say, but sorry, India is a mixed economy. What is meaning of mixed economy? Certain features of capitalism will be followed in mixed economy, and that is the reason you will observe GDP is never constant. GDP is never always increasing. It will increase, fall, increase, fall, increase, fall, etc. But please do tell me now, this is one point. Please do tell me, if GDP is decreasing, if GDP is decreasing, how many of you, right, are under the impression that private sector will invest more? This is a question to you. Answer it. Imagine GDP is falling down. Do you think private sector will invest? Right? Anybody is there? No, private sector will not invest. Who will invest? Government. Now, please look at this. Please look at this. When the GDP is going down, when the production in the economy is going down, what is the government of India doing? Either government of India or the state governments. They will increase expenditure. Correct? When the GDP is going down, when the whole investment in the economy from the private sector is going down, production is going down, employment is going down, what is the role of the government? Government will invest more. Government will invest more. Why? So that, right, the investment will create jobs. So that investment will lead to higher production, higher employment, higher demand, and automatically the whole economy will recover. Now, can I simply say, based on this, can I simply say the policy of the government, I'll repeat, the policy of the government is going to reduce what is happening in the economy, is going to reduce the impact of the things that are happening in the economy. Any problem, please do let me know. I'll repeat it. The policies of the government are taken in order to reduce the impact of the things that are happening in the economy. Impact of the things means what? The GDP is falling down. GDP is small, very becoming smaller and smaller. If government will not invest, what will happen to the GDP number? Don't you think the GDP will further come down? Right? There is a term called as, right? Have a look at this. There's a term called as a recession. Please look at it. There's a term called as recession. What do you mean by recession? Whenever the growth rate is negative, please understand the terms here. Whenever the growth rate is negative, what do you mean by growth rate? I'm talking about GDP growth rate. Any problem in understanding this? Please do let me know. For example, sir, what do you mean by this? Tell me, if your GDP is 100 and now the GDP is 90 rupees, can I say growth rate is negative? Let me know. In the last quarter, let's say first quarter of last year, your GDP was 100. And this year, first quarter, GDP became 90 rupees. Can I say growth rate is negative? So whenever growth rate is negative for 2 consecutive quarters, whenever the growth rate is negative for 2 consecutive quarters, this is called as a recession. This is called as recession. And when growth rate is negative, can I simply say GDP is contracting? Let me check. If the growth rate is negative or if there is a recession in the economy, can I say GDP is contracting? GDP is going down. Now please have a look at it. When the GDP is going down, what should be the role of the government? Should the government reduce its investments or should the government increase the investment? Don't you think government should increase the investments? Otherwise, what will happen? The situation in the economy, which is recession, will become much more bigger. Recession will become much more intensive. GDP will further contract more. That is the role of the government. That is the role of the government. And please have a look at this. Can we ensure demand will increase by the government through the policy of the government in a different way? For example, one way that government will create a demand is by investing more. Any problem with this statement? I'll repeat it again. One way through policies of the government that the demand will increase in the market is by investing more. Any problem with this statement? Can I give you second statement now? Right, first statement is invest more. Government should invest more. Second statement, can I also say government can increase the demand for goods and services in the market by reducing taxes? Yes, by reducing taxes. Those who are asking, sir, how? Then I will simply tell you, please go back. Please go back to earlier lectures and have a look at it. Because last week we have discussed something called as savings, investment, capital formation, etc. So there I've told you how taxes can be used by the government to adjust the demand in the market. So now tell me, using both of these policies, can government increase the demand in the market, promote growth in the economy, promote employment generation, etc., etc.? So now I will put it in a form of a statement. Follow this very carefully. In this situation where there is a recession in the economy, the government policies are reducing the severity of recession. Correct or wrong? I'll repeat it again. This situation where there is a recession in the economy, the government policies are reducing the severity of recession. Rather than making it much more right higher, government policies will reduce the severity. Is the statement correct or wrong? Anybody has a problem with the statement? This is one example. I'll give you second example. Second example. Imagine there is very high inflation rate in India. Inflation is high. And I've told you one of the reasons why inflation could be higher is people are earning more and more income. And as a result of this, demand will increase. and the demand is so high that it has overtaken the supply of goods and services in the market. And can this lead to higher inflation in the market? Again, answer is yes. Should government of India sit quietly? Think of it and tell me. Should government of India sit quietly when there is inflation in the economy? No, government of India should not sit quietly. Can government of India reduce the demand in the market? Again, two methods. Can government reduce the demand in the market? Yes. One way, government can increase taxes. All of you agree? Government should increase taxes. Automatically, if the taxes are increased, the money that you have, disposable income will go down. And when the disposable income will go down, demand will go down. Second way, can I also say, government should reduce its expenditure. Reduce its expenditure. Any problem with this? If government will reduce expenditure, investment, right? That is the meaning of it. If government will reduce the expenditure or investment, don't you think overall investment in the economy will go down? Right? The salaries which are paid now automatically will go down, and to a certain extent, demand will also be reduced. Any problem with this? So have a look at this. On one side, in the previous example, government took policies in order to increase the demand. In order to increase demand. And in this example, I'm saying government is taking policies in order to reduce the demand. Now, please understand this carefully. If there is very high growth in the economy, let me ask you a simple question. If there is very high growth rate in the economy, please tell me, what should government do? Government, should it implement policies to increase the demand, or should it implement policies to reduce the demand? Think of it and tell me. If there is already very high growth rate in the economy, should government take a policy measure to increase demand or to decrease demand? To decrease the demand. All of you will agree? Government should be able to reduce the demand. Why? If government will also invest more, imagine growth rate is very high already. If government will also invest more, government will reduce the taxes. Don't you think demand further will increase? Inflation will go out of control. Inflation cannot be controlled. So on one side, if government will increase investment, increase the demand when the growth rate is very high, it will lead to inflation. And on the other hand, it will decrease the demand. We will be able to control inflation. Control inflation. So understand this carefully now. I'll start using terms. Whenever government policies will reduce the severity in the market. I'll repeat. Whenever government policies will reduce the severity. Severity means if recession is there, we'll go opposite to recession. If inflation is very high, we'll control inflation. So whenever government policies are used to reduce the severity in the economy, these policies are referred to as counter-cyclical policies. Any problem with the statement? Please do let me know right now. I'll repeat the statement again. Whenever government policies will reduce the severity in the economy, severity of the situation will be reduced. Such policies are called as counter-cyclical policies. And whenever government policies will increase the severity in the economy, if inflation is there, more inflation will be caused because of the government. If a recession is there, more recession will be caused because of the government. Such policies are referred to as pro-cyclical policies. Pro-cyclical policies. Any problem with this? Because I'll ask you questions now. Any problem in understanding what is pro-cyclical, what is counter-cyclical? Now, question number one. Between pro and counter-cyclical, which is preferable? Think of it and tell me. Between pro and counter-cyclical, which is preferable? You think pro-cyclical policies are better for the government to follow all the time, or counter-cyclical is much better? counter cyclical policies are better. Why? Government should not invest more to cause inflation. It should not be the policy of the government. Government should not withdraw its investment to cause more recession. For example, if there is a recession, let's say hypothetically, if there is a recession in the Indian economy, don't you think that's a duty of the government to promote recovery in the economy? Recovery means more investment, employment will be generated, right? Production will increase, etc. Don't you think it's a duty of the government? Because private sector is not going to do it. I hope you understand. If there is a recession in the economy, we already have established this. Please tell me, do you think private sector will invest more in the Indian economy? Is there anybody under that impression? So recession means private sector will come, they will invest heavily in India. No, my dear. Recession means the private sector knows demand will be very less. In that situation, private sector will not invest. Then whose duty is it to invest? Government of India. So don't you think government of India should follow counter-cyclical policies whenever recession is about to go beyond control and whenever there is a possibility of recession in the economy? That is the reason counter-cyclical policies are preferable. Done? Now, please have a look at the table and tell me if there is any doubt. I'll explain the table here. Follow this table very carefully. Questions have been asked. Point number one, many of you will ask me, I'll explain before you start asking. There's a term called as fiscal policy. What is the meaning of the term fiscal policy? Fiscal policy, long form is there here, refers to the taxation policies of the government plus expenditure policies of the government. Any difficulty, please do let me know right now. What do you mean by fiscal policy? The policies that the government will implement in order to impose and collect taxes and policies for expenditure. Government's expenditure, collectively, these are referred to as fiscal policy of the government. Now, fiscal policy, right, there are two terms, can be contractionary, can be expansionary. Fiscal policy can be contractionary and can be expansionary. For example, if government of India will spend more money, think of it. If government of India will spend more money, can I call it as a expansionary fiscal policy? Any problem? Please do let me know. Government of India will spend more money. Expansionary means the overall money supply increases. If government of India will spend more and more money, can I call it as expansionary policy? Any problem here? And if government of India will collect more money from you, government will reduce its expenditure, can I call it as contractionary policy? Any problem? Please do let me know. Expansionary means money in the economy should increase. Contractionary means money in the economy should decrease. Contract and expand. Right? Now have a look at this. Pro-cyclical, counter-cyclical. Pro-cyclical and counter-cyclical. Let's say hypothetically, there is a recession in the economy. Okay, there could be recession. I hope you understand. Let's say there is a recession in the economy. Now, if there is a recession in the economy, if government will increase the taxes, please tell me now. If government will collect more and more taxes from you, don't you think demand will go down? Yes or no? Demand will go down. And if the demand goes down, don't you think recession will become much more intense? Recession will become much more severe. Can I call this basically as right a pro-cyclical policy? Any problem with this? Contraction is already there. The GDP is already contracting. Furthermore, GDP will fall down. That is basically a pro-cyclical policy. Recession is already there. Government policies are increasing recession in the economy. On the other side, what if I say recession is there in the economy? Government will increase its expenditure. Government will also reduce the taxes. Now, don't you think because of both of these measures, salaries will increase in the economy? Demand will increase in the economy. So rather than recession, can we have growth in the economy? Can the GDP increase? That is counter-cyclical. Any problem here? So this is when recession is there in the economy. What if growth is already very high? Expansion is observed in the economy, right? In that situation, if government will also spend more, government will reduce the taxes, force you to spend more in the, or lead you to spend more money in the economy, that will cause inflation. I hope you understand. That will basically lead to severity in the economy. That is basically pro-cyclical policy. Demand is already very high. They will increase the demand in the market, causing inflation. That is expansionary. But on the other side, you have lot of money to spend, demand for goods and services. I'll collect more taxes from you. Increase the taxes. Increase the taxes. I am also spending more money. Production is very right. The job generation is also very high. Demand is also very high. I will reduce my expenditure. Right. So government expenditure will automatically come down. That is a contractionary fiscal policy, counter-cyclical when there is a high growth in the economy. Any problem with the table? Please do let me know right now. Any problem with the table? What we have discussed, the idea of a pro, counter, etc., etc. Any problem with the table? Right? So vicious cycle, virtuous cycle, pro-cyclical, counter-cyclical example, right? You must have seen in the current affairs. What is the definition of recession? Definition of recession is whenever the growth rate for any economy for that matter is negative for two consecutive quarters. For two consecutive quarters, whenever the growth rate is negative, that is called as right a recession. For example, imagine for quarter 3, or let's say quarter 3 the growth rate is minus 2%. For quarter 4 growth rate is minus 3%. Can I call it as a negative growth rate for two consecutive quarters? Answer to my question now. Quarter 3 the growth rate is minus 2%. Quarter 4 growth rate is minus 3%. Can I say growth rate is right basically negative for two consecutive quarters? This is called as a recession. This is called as a recession. Let me ask you one more question here itself. Let's say quarter 1 growth rate is minus 5%. Quarter 2 is plus 2%. Quarter 3 is a minus 3%. Can I call this as a recession? Let me know. Can I call this a situation as a recession? Second one, I'm not asking about this. Can I call this as a recession? Some of you are saying yes. How? Consecutive. Do you understand the term consecutive? Consecutive means continuous. Right? Are you observing for two continuous quarters a negative growth rate in the second example? No. First quarter negative, second quarter positive. So there is no two continuous quarters which are experiencing negative. So that is the reason. No, this is not recession. Please be very careful. Let me ask you one more question. Let me ask you one more question. Let's say quarter 4 of a financial year 22 minus 3%. Quarter 1 of a financial year 23 minus 1%. Can I call this as recession? Let me see. Quarter 4 of financial year 22 minus 3, quarter 1 financial year 23 as a minus 1%. Can I call this as recession? Very interesting answers. Some of you are saying no. My dear, this is a recession. This is a recession. Why? Fourth quarter of financial year 22. After that, which quarter is there? Tell me. Right? After fourth quarter of financial year 22, which quarter is there? First quarter of financial year 23. So don't you think both are continuous? Let me know. Both are continuous? Yes. And in both of these quarters, which are continuous, is there negative growth rate? Yes. It's a recession. Any problem in understanding this? Definition is very simple. For two consecutive, that means for two continuous quarters, if you have negative growth rate, call it as recession. Whether these two are in this year, next year, doesn't matter. It should be continuous. That is important. Okay. but -1 is bigger than -3. No, no, don't make a comparison between these two quarters growth rate. I'll tell you, please understand this. Please do not make a comparison and say, sir, last year, in the last quarter, the -3 was there. This quarter, it is -1, hence it is lower. Don't make a comparison. I'll tell you why. How many of you are under the impression that when I say, think of it, quarter 4, growth rate is -1%. What do you mean by this? Let me check. Financial year 22, right? -1%. I've written -1%. What do you mean by -1% for quarter 4? Please understand this. Quarter 4 of a financial year 21, quarter 4 of a financial year 22. We are comparing same quarters of 2 consecutive financial years. I hope you understand this, right? Let me know if you have a doubt even now. If I say quarter 4, financial year 22, we have registered a growth rate of -1%. What is the meaning of it? Whatever was the GDP value, let's say 100 rupees in quarter 4 of financial year 21, compared to that, in quarter 4 of financial year 22, it is 99 rupees. Hence, the growth rate is -1%. Any difficulty here? Do not compare between two different quarters, quarter 4, quarter 1. No, that is a wrong comparison. I'll tell you why. Think of it and tell me now. Between quarter 2 and quarter 3, where generally you find higher GDP value for India. Let me see how many of you understand the economy. Right? Quarter 2 and quarter 3, where do you expect generally GDP to be higher for India? That is market price of final goods and services. Quarter 3, you should expect more GDP value for quarter 3. I'll tell you why. Quarter 3 will include which months? Quarter 3 will include which months? October, November, December. Simple. October, November, December. And quarter 2 will include what? June, July. July, August, September. Now, don't you think this period is very well known for a lot of festivals in India? Lot of festivals. So tell me, between second quarter and third quarter, where the sales of car will be higher, where the sales of two-wheeler will be higher, where people will travel more and more, where people will purchase a lot of electronic goods. So don't you think that makes sense to you? Tell me at least now. Don't you think that makes sense when we say quarter 3 is very, very important for Indian economy? Now tell me, should we compare quarter 2 and quarter 3 of same year, or should we compare quarter 3 of previous financial year with quarter 3 of current financial year? Let me know. Right? Should we compare quarter 2 and quarter 3 of current year, or we should make a comparison quarter 3 of 2 financial years? Don't you think it makes better sense when you compare same quarters of 2 financial years? Right? That is a better indicator. And that is the reason whenever you talk about, let's say, quarter 1 growth rate, right? They will give you data like this. Quarter 1 financial year 23 growth rate is, let's say, 4%. What do they mean? They are comparing quarter 1 of financial year 23 with quarter 1 of financial year 22. And that is the reason they are telling you. Can I give you one more assignment? When I give you a lunch break, open the article on inflation. Open the article on inflation. And if you read the article on inflation, they will tell you June last year, June of 2022 and June of 2023. That is the comparison that they have done. Check it and let me know. They will compare it month-wise also, but what makes more sense? What was the price of a basket of commodities in June 2022? Compare that with June 2023. And that is the reason they will say June 2023 inflation is this much. Any problem in understanding the concepts behind it? Why do we do that? Why it is relevant? Why it is important, etc., etc.? Okay. It makes better for comparison. Better comparison. You cannot compare two different datas of two right different quarters, because quarters from one to one quarter, the behavior in the economy will be different. Uh, can we call it as positive recession? There is no concept of positive recession. It is simply recession. Okay. Any other doubts? Any other questions that you people have? Sir, is pro-cyclical policy used at any instance? My dear, please check how much is the government expenditure. What has happened to the government expenditure in financial year 20, financial year 21, financial year 22, and financial year 23. You will see government expenditure continuously has increased. Government expenditure continuously has increased, which is nothing but a counter-cyclical policy, because in the last couple of years, we have experienced a recession in the economy. Any other questions? Anybody has any kind of a doubt? Can we go forward? Can we go forward? Exception of law of demand and supply. My dear, I'm discussing GDP. You're asking me law of demand and law of supply. Right? Reserve it to end of the class. If inflation of India is at 4% approximately currently, how can inflation be higher than last year's during start of Russia-Ukraine war? My dear, last year the price of fuels were much higher. Check it. Price of fuels were much higher. We'll discuss later. Don't worry regarding price of fuels. Can we go forward? Any doubt regarding what I'm discussing now? If you're going to ask me law of demand, please reserve that question to the end of the class. Why government increases to why government invested to increase supply, my dear? In recession, nobody is investing. During recession, private sector will not invest. Right? So private sector will not invest means, right, automatically unemployment rate will start increasing. Demand will also be very lower. So at that point of time, government will invest so that employment will be generated, salaries will start flowing, production will increase, so that recovery will happen. Okay. Okay, done. So let me go to the next one. Let me go to the next concept. Right, all of them are done now. Only questions are left out. Only questions are left out. Let's solve the questions. Right, and by the way, most of these questions are from last 2 to 3 years only. Let's solve the questions. Okay, solve the questions. Okay, why only 53% have answered correctly? Let's start. Which among the following steps is most likely to be taken at the time of economic recession? All of you understand recession now? Anybody has a problem? Please do let me know. Anybody has a problem in understanding what is recession? It's a very simple idea. In two consecutive continuous quarters, if the GDP becomes a negative, growth rate becomes a negative, then we call this as a recession. And please understand, there is one more term, depression. What do you mean by depression? If recession will continue for more than 3 years, have a look at this. If recession will continue for more than 3 years, that is called as depression. So if the government doesn't take any policy measures during recession, guaranteed will basically snowball into depression. So let's start. Cut in tax rates accompanied by increase in interest rates. Okay. Now, many of you will simply say cut in tax rates, yes, sir. And many of you will simply yes, right? So tax rates must be cut so that the demand will increase, right, during recession. But what about the second part of the statement? What about the second part of the statement? Increase in interest rate. What do you mean by increase in interest rate? Let me explain it to you. Understand this very carefully, right? Because again and again we'll keep on using this idea. All of you heard of Reserve Bank of India? Please do let me know. Have everyone, all of you, right? Has everyone in the classroom, have you heard of Reserve Bank of India? Role of Reserve Bank of India, there are multiple roles. I'll focus on one of them. Role of Reserve Bank of India is to provide loans to banks. One of the most important one. It is to provide loans to banks. Now, a bank will take loan from RBI. What do you think bank will do? Don't you think bank will also provide loans to customers, such as you, such as me, such as companies? Now, please tell me, when RBI will give loan to the bank, if RBI will reduce its rate of interest, because loan means a rate of interest has to be there. If RBI will give loan to the bank and reduce its rate of interest, don't you think bank will also automatically reduce the rate of interest on their loans? And if banks will reduce the rate of interest, what is going to happen to loans? Will people take more loans? Will companies take more loans or lesser loans? Let me know. If there is a reduction in the interest rate, will the loans issued, will it increase or decrease? It will increase. All of you understand? It will increase. That is, more loans will be taken. Done? And if more loans are taken, what is going to happen to the demand? What is going to happen to production? What is going to happen to the demand in the market? Automatically, production will increase, right? More and more people will get jobs. Demand will increase, and this will lead to growth in the economy. All of you will agree with me? This will lead to growth. That is, GDP will increase. GDP growth rate will also be achieved. And on the other hand, look at this. On the other hand, what if RBI increases interest rates? Rather than reducing, what if RBI increases interest rates? So when RBI will increase interest rate on the loan given to the bank, bank will also increase its interest rate. So what will happen to loans issued? Less loans will be consumed in the market. All of you agree with me? Because the rate of interest is very high. Companies will look at it and say, I don't want to give so much rate of interest. You will look at it and say, I don't want to give so much rate of interest to purchase a home, right, car, etc., etc. Now, when less loans are taken in the market, what will happen to the demand in the market? Automatically, the demand will also go down, production will also go down. Can I say in this situation, GDP will become lower? Lower means you could have produced 100 crore worth of goods, because demand is lesser, right? The production is lesser. Rather than producing 100 crore, which you could have done it, rather than producing that much, you could produce only 90 crore. Is the logic okay? You could have grown at 7%. I hope you understand. You could have grown at 7%. Rather than 7%, you will end up growing at 5% GDP growth rate. So it will impose a limit on the growth. It will limit growth. So on one side, if RBI reduces interest rate, growth will take place. And on the other side, if RBI increases interest rates, it will limit growth. Some of you are saying recession will happen. No, my dear. I'm not saying recession here. Please understand this. Last year, your GDP was 100 crore. This year, if interest rates were right at this level, whatever the interest rate, if these were at this level, you could have produced, let's say, 120 crore rupees, which is 20% growth rate. Agreed? Don't say recession is going to happen here. No. Last year it was 100 crore. If interest rates were not changed, you could have achieved 120 crore rupees GDP. But because interest rates have increased, rather than producing 120 crore, you will end up producing only 110 crore. Possible or not? Which means rather than achieving a growth rate of 20%, you will end up achieving growth rate of only 10%. That is the reason I'm saying it will limit growth. I'm not saying it will cause a recession. If there is no investment in the economy, if RBI increase interest rate, no doubt that will cause a recession. But will RBI do that? Think of it and let me know. If nobody is investing in the market, right, there is already a recession or there is a slowdown in the economy, will RBI make it much more costlier to borrow in the market? No, my dear, because then it will cause a recession in the market. So all of you will agree? On one side, growth can be very high. On the other side, growth can be limited. And that is because of interest rate policy of Reserve Bank of India. Now, please look at it. Is it okay if I say RBI cannot always, right, cannot always have the same interest rate when there is a danger of inflation in the market? I hope you understand. Let's say interest rate is maintained at a particular level right now, but if incomes of the people are increasing already, should RBI maintain the same interest rate? Tell me now, right? Let's say interest rate, right, is 4%. RBI has an interest rate of 4%. On one side, interest rate is 4%. On the other side, GDP is growing very good. GDP growth rate is very high. People are earning lot of incomes. If RBI does not intervene in the market, what will happen because of this? Don't you think there's a danger of inflation? Don't you think there's a danger of inflation? So what will happen? RBI, they know that GDP growth rate is higher, but if I maintain the interest rate at the same level, income is already higher, demand is already higher, right? I will have to increase the interest rates. So when there is a growth rate in the economy, there's a danger of inflation. So if there is a danger of inflation, RBI will increase interest rates. And on the other hand, if there is a recession in the economy, if there is a recession in the economy, right, do you think RBI's right policy is to increase interest rates? No. RBI has to reduce interest rates in order to address the recession in the economy. At least now, all of you will agree, first point is wrong. I've told you all of this story because again in banking we'll be using this. At that point of time, don't say how RBI will control inflation, how RBI will cause inflation, how RBI's policies will affect GDP. Don't say that. Please let me know. In this picture itself, in this slide, I'll give you certain statements whether these are okay with you. RBI policies can be used to control growth, control inflation. RBI's policies, right, can also cause inflation, right, can promote growth in the economy. I've given you two statements. If you have problem with any of the statements, please do let me know. But please, right, look at the statement A now. Cut in the interest rates, I'm sorry, cut in the tax rate. No doubt that will help us in promoting recovery. But what about interest rate? If you increase interest rate, will it help in recovery? Should it be the policy during recession? Answer is no. Second statement, increase in expenditure on public projects. Of course, yes. During recession, you expect government to increase the expenditure on the projects. So statement B is correct. Increase in tax rates. If government will increase the tax rate, automatically what will happen? Tell me now. If government will increase the tax rate during recession, don't you think demand will go down? Recession will become much more severe. It might even lead to depression also. So C is wrong. Reduction of expenditure, right? Straightforward, wrong. Right. So right option for the question is option B. Anybody has a problem? Can we go to the next one? Does anybody have a problem? Right? Any one of you has a problem regarding the analysis of the question? Please do let me know. And this is basically application of a pro-cyclical and counter-cyclical policy that we have discussed some time ago. Okay. Next question. Term GDP. Why be? Arey, my dear. When there is a recession, what do you want the government to do? Some of the students will keep on asking questions simply for the sake of asking question. When there is a recession, what do you want the government to do? Tell me, what do you want the government to do? We'll discuss this question later. GDP deflator, I need inflation for this. We'll discuss this, don't worry. Right? When there is a recession in the economy, what do you want the government to do? Which means you have not listened to the lecture very carefully. Right? I don't understand what is the issue here. If there is a recession, government policies should be to increase expenditure. Right? It is already there in the slide. Right? Don't keep on asking. I get a sense that you are not listening to the lecture then. Okay, done. Have a look at the question. Any problem with the question? Explain the difference between computing methodology of India as a GDP before 2015 and after 2015. We have discussed this question last week as well, right? I've spent around 1.5 hours to explain to you the GDP methodology. Question is on the same. Okay, very straightforward question and very easy if you ask me. Okay, so these are the questions. One question I've skipped. That is the idea of a GDP deflator. Today we'll discuss deflator in the second session. Then you can understand and easily solve this question as well. Okay, so this is a discussion regarding the concept of national income aggregates. We'll take a break now. But before that, anybody has any kind of a doubt regarding what we have discussed? Please do let me know. Anybody has a doubt regarding national income aggregates that we have discussed? What is parallel economy? Parallel economy simply means black money. There is a lot of black money that is present in the economy which is generated, and because the information regarding the black money, nobody is going to disclose how much black money they have. For example, if you ask, right, let's say any businessman, or let's say a politician, or even an individual, ask them, right, how much black money they have, nobody will disclose that. So black money is there in the system, but we don't have the accountability, we don't have numbers regarding that, hence it is not counted. Okay. Pro cyclical, I'll repeat it again, understand the logic. Pro means what? In support. Pro cyclical policy means the policies of the government will increase the severity of an event in the economy. Whatever is happening in the economy, it will increase severity, intensity will increase because of the government policies. If there is a recession, more recession will happen. If there is a high growth rate, inflation is already there, more inflation will happen. That is pro cyclical. More questions, my dear, whatever questions have appeared in the last 4 to 5 years, I'll put those same questions, right? I cannot keep on creating questions. You have weekly test appear for that. Whatever have come in the test papers, that is UPSC papers, I'm taking the same questions. PCI also includes a born babies. Please tell me, is a baby which is, let's say, 1 month old or 2 month old or 2 year old, is it counted as a part of population? You tell me the answer. Because the formula is very simple. Per capita income is equal to national income divided by population. Right? Is a baby which is born, is it counted as a part of population? Answer is yes. Okay. Okay. Anything else? Anything else? Any other doubt that you people have? GDP growth rate and inflation rate is same. No, GDP growth rate measures what is the change in the GDP numbers. Any problem in understanding? GDP growth rate measures what is the change in the GDP number. Inflation measures what is the change in the market price for set of commodities. I'll give you the idea, don't worry. For example, there is an indicator WPI. Have you people seen the WPI article in the Hindu newspaper? WPI, it's a type of inflation only. In case of WPI, do we consider all the goods, final goods and services which are produced in India? No. There is a list of only 697 goods which are considered while calculating WPI. So inflation rate is not equal to GDP growth rate. No, that is a misconception. Okay. Ashwin, any question that you have? Okay. Sachin. Sachin, you have any questions? I am making a call. Receive it now, Baba. Sudhir. So when I've made a call, please receive the call. If you don't receive the call, there is no point. Nobody is receiving. But everybody says, right? Lakshmi. Okay, anybody has any issue, any problem, any doubts? Otherwise, we'll basically take a break then. If nobody has any kind of a doubt, we'll take a break. Lunch break, by the way. Anybody? Okay, done then. I'm not getting any calls, any doubt, no doubts also I've received. So let's take a break then. Let's take a break. Okay. What is counter-cyclical? Counter-cyclical simply means the policies of the government. Policies of the government are going to reduce intensity of economic situation. Reduce the intensity, right? For example, if there is a recession, government policies will reduce recession, will promote recovery. And if there is a high inflation, government policies will help us in controlling inflation. That's counter-cyclical. Okay. Okay, done. So let's take a break then. Let's take a break. Let's restart the session generally on Saturday. So 3:15. So 3:15 plus 40 minutes, 3:55. Let's restart the session at 3:55 p.m. Okay, 40 minutes lunch break. Take a break then. Okay, take a break. We'll meet again.